Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. Welcome to Friday's edition of Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Rima. With me is Nigel and Prashant. Will be joining in just a bit. Nigel, finally, we've come to Friday. It's been a tough week for our markets. Despite the recovery that we had yesterday, where we snapped a three-day losing streak, week to date, the Nifty is still down 1.5%. The mid-cap index is down 2.5%. The good news is global cues are a lot better as we begin trade. For the second day in a row, Dow rallied. And with the up move that Dow had on Thursday and on Wednesday, it's pretty much erased all of Tuesday's losses. Yeah. So week to date, the US markets are flat, but the Indian markets are under pressure. So the question is, will the recovery that we had yesterday extend itself? The GIFT Nifty will come up for you on your screen. For now, it's flat, but most of Asia right now is higher in trade, so they're pushing up. There are two other important internals. One, it's going to be a very heavy earnings day. There are three Nifty companies which report their numbers. You've got a Shriram Finance, you've got a Cipla, and then you've got JSW Steel. But Monday is a holiday. So when we open for trade on Tuesday, the Saturday earnings we'll be reacting to the Saturday earnings. And on tomorrow, you've got a Kotak Mahindra Bank and Ultratech. So today is going to be a very earnings-heavy day. And gold and silver, what can we say about that? It's just getting so precious. Gold is now almost inching towards 500,000 an ounce. In terms of futures, I think we're close to 49.60. And silver is pushing towards $100 an ounce. So incredible move seen in gold and silver. There you have those rates. Almost 5,000 on gold and almost $100 on silver. But it's been a very volatile week for our markets, Nigel. And the good news is today's Friday and Monday is a holiday, so extended weekend.
Well, that's right. We get ourselves set for a long weekend. But today there is very, very important trading session. I said this because it's ahead of a long weekend. So the end of the week volatility as well could pick up, particularly the broader markets going by the pain that we've seen. There could be some squaring off of positions as well with regard to the broader market stocks. So we'll keep an eye out on that. Also, it's just one day ahead of the monthly expiry. On Tuesday, you'll have the monthly expiry that will play out. So effectively, today is a very, very important trading session. And maybe some kind of optimism now ahead of Republic Day, when we'll hear Prime Minister Narendra Modi speak as well. And also, we just have a few trading sessions getting into budget. So all those cues will stack up. I think the most important cue is going to be the stability in the rupee. You know, in yesterday's trading session, after a while, at least it didn't depreciate further. And you want some stability in the rupee. If you see that, then maybe, in fact, even our markets could participate. But I think this is going to be an important cue. Economics aside, the markets want some kind of stability on the rupee. Yesterday, yes, we came up from the top. The good news was at least the mid and the small caps, they showed some kind of outperformance after a while. So that was good to see, because portfolios actually have got hammered. What about the flows? The FIs, they continue their selling ways. While you had the DIs, well, they bought yesterday. So net, you had the DIs actually that outweighed the FI selling. Institutions were net buyers. Moving to the index futures data, no surprises for getting. Well, you have the FIs. They added close to around 2 short positions for every 1 long position. The short positions, by the way, have come down from around 92% to around 87%. And yet we haven't seen any kind of big short covering bounce, because this market is still aggressively net short. And the FIs, they are holding on to their short positions on index futures. The good news yesterday was, after a while, we saw on stock futures, actually, they added more longs than shorts. So yesterday, close to around 4 long positions were added for every 1 short position. Gives you some kind of hope that maybe, we've got a little bit extended on the downside just in the near term. The PCR a few sessions ago had moved to around 0.72. That's popped back up to around 0.87, though you'll have to say it's still closer to the lower end of the range. And a couple of strikes come up for you on the screen. 25,400, that was the level from where we saw the U-turn yesterday. 25,400 call was very active, with the premium at around 96 rupees. And on the downside, there was some writing that we saw. At around that 25,200, 25,300 put, both of them did see some kind of writing. And that comes up for you on the screen as well, which brings us to the levels. One positive yesterday was we made a higher high and a higher low. So for today's trading session, if we look at a range, yesterday's low becomes a bit of a reference point, and yesterday's high will be a bit of a resistance. So you get a fresh breakout once you see, conquer this mark, which starts around 25,450 to around 25,500. Important reference point on the downside. You don't want this 25,100, 25,150 to break, because that's where the 200 DMA is at as well. The Nifty Bank will have to perform. Yesterday, it got to around the 20 as well as the 50 DMA. It ended a little below that mark, but that's going to be the important range. The Nifty Bank needs to conquer this particular mark. So net-net, hoping for a good end to the week ahead of the weekend. There is no optimism with regard to the budget or even the Prime Minister's speech on Republic Day. So let's hope sentiment can turn a little bit. The Indian rupee stability, I think that was the biggest positive of yesterday. But Prashant joins us in the studio. So Prashant, what are you tracking? Welcome.
Welcome.
I have to say I ran the last 100 meters, not 9.9 seconds though. Morning, guys. Absolutely, as you said, I heard a little bit of what you said in the beginning, right? Zero noise around the budget.
Yeah.
Zero, not noise, zero expectations around the budget. I mean, actually, nobody is talking about the B of the budget even, right? So, and I think that perhaps becomes, hopefully, right? I mean, it's got to... It's not a sufficient condition for the markets to do well, but the point is expectations are low, and if something were to come on the positive side, I mean, it could be good. Let's just quickly tell you just a bunch of things, right? And I think Reema and Nigel have covered a fair bit. You know, 5 sessions to go. And the reason I say 5 is because Monday is a market holiday for Republic Day. And you'll hear from the Prime Minister, of course, making that speech. So we will see, I mean, directionally, if we hear something from him. And of course, then Sunday, the coming Sunday, the next one, not this one, the coming Sunday is the union budget. And markets are, of course, going to be trading. Expectations are zero at this point. Now, they'll build up, I think, over the next 5 days. Now, remember, this week has been just incredible, right? I mean, just imagine the amount of news flow we've had to deal with. But the good thing is, as we wind down and go into the weekend, all of the news flow which caused this turbulence in global markets is settling down. And the reason I say is because political tensions, a little diffusion of that, and of course, very, very solid economic data out of the US. So equities in the US rose. S&P was up 0.5%. NASDAQ was up 0.9%. And you have the Russell. By the way, the Russell has done better than the large cap stocks for about 12 or 13 sessions flat. And the Russell 2000 is at a fresh all-time high. Meta was up 6, Tesla was up 4. And just to give you a sampling, the kind of stocks which did well. So large caps really participating. Gold, silver, and so much talk and action around the financial instruments here, right? I mean, all the ETFs down sharply. But, the underlying prices are continuing to rise. So Goldman Sachs, for example, raised their gold price forecast about $5,400 by the end of 2026. You know, it's central bank competition for limited amount of gold that is driving prices up. 2.5, silver up 4.6. Oil prices, thankfully, are down about almost 2%. Now, the reason I said there's been a diffusion of political tensions is because more details of Trump's Greenland framework have come to light. So NATO is going to beef up security in the Arctic region. And this is to counter Chinese and Russian influence, stationing of U.S. missiles. I mean, the missiles are already there. And of course, there's a talk of mining rights as well to keep the Chinese at bay. As a consequence of all this, as a consequence of what we heard from President Trump in Davos about not using military action or taking Greenland by force and kind of sort of, stepping off, EU is going to vote on ratifying the trade deal with the US. They'd kept this in abeyance, saying that, well, we're not going to do it unless because we are faced with threats from the US. So I think that so this is significant. I mean, you didn't want another trade war between very large trading blocs, bad for the world and bad for markets as well. So I think all of that is cooled off. And that's the reason why I'm saying, same time last week, it was all looking calm. And then we started this weekend rhetoric ramped up on Greenland, and markets all went into a bit of a tailspin globally, and that's settling down as we go into the weekend. Now, just to tie in the levels, like day before yesterday as well, the Nifty ended in the middle of the trading range, almost bang in the middle of the trading range. There have been large candles 2 days in a row now. Rupee's broken a 6-day losing streak. And I think, the stability of the rupee important, right? 91.70, 91.72 is when the RBI has sold dollars. And hopefully between 70 and 80, that is 91.70 and 80, the RBI is going to defend that level, and the signal's gone to the market. So maybe, at least in the near term, further tests will not be there. We'll see. But you need that stability to come in. The Nifty, the 200-day moving average is 25,134. and that still, I mean, is an important level. It coincides within that candle yesterday that we saw, and the Nifty Bank 20-day moving average is 59,542, which is, of course, I mean, the critical operative level here. We could look at near-term hourly and 40-day exponential moving average, etc. on the upside for the Nifty. I don't want to put that out. Let's see. Let's get 1-2 days more of stability, and then we'll pick it up from there. GIFT Nifty gives you a sense of how we're likely to start, and then we'll pick it up from there. So it's kind of like what we had yesterday. Neither here. I think yesterday we had a bit of a bump up, at least indicative bump up. This morning it's slightly down about 10 points, but could be anything. So that's where we find ourselves at, Rima. But you know, things are settling down.
Calmer.
But you don't want to repeat of last weekend this coming weekend, because that is when all the trouble started.
Okay, let's get in Robert Subramaniam, head of global macro research, Nomura, joining us on the show. Robert, there's been so much geopolitical noise as we've begun 2026 with. I don't remember such a start to the year. But as Prashant said, this morning at least things appear to be on the calmer side. What have you all made of the start to 2026 at Nomura? And now what is the base case? Let's go by 3 months, 6 months, and then perhaps, if you want to even wager, to talk about the end of the year and how that might shape up.
Sure. All the things that have happened so far in January, I think it would be fair to say that a lot of those events typically would happen over a full year. We've had it in less than a month. I think it's right. I think things have calmed down around the US-Europe tensions over Greenland. I think also the Lisa Cook hearing, I think, was in favor of Fed independence. And I think also in Japan, we shouldn't forget, with the elections now formally announced and Parliament being dissolved today, I think the bond market there has calmed down as well. I mean, the Nomura view is actually a very constructive and positive one on global growth. We think growth is going to be solid this year, around 3%, maybe a bit above 3%, led by the US. But in the emerging market world, we would say led by India. So we're positive. We think geopolitics are going to be in the background, but we don't think they're going to completely disrupt markets too much. Our biggest focus is on AI, which we think is going to continue to boom. We think Fed independence will be compromised a little bit, but not substantially. We think the institutional infrastructure in the US still applies. And so, you know, we have an environment where we get solid growth, a bit further cuts in US rates, the AI story continuing. So it's all quite constructive.
Rob, hi, morning. Prashant here. Actually, if anything, just purely data-wise, I mean, forget positioning and how long people are in the US, etc. I mean, it's looking superb, right? The environment. You've got growth, which is stronger and stronger. High-frequency data all is coming in hot. And you've got a president who wants interest rates dropped sharply, and maybe he'll get his way, who knows. I mean, this is kind of the perfect environment for stocks. Again, I mean, I'm just saying theoretically, because stocks have already done quite a bit, anticipating a fair bit of this. Your thoughts?
Prashant, I would agree with you. The way this can play out, we see our baseline is, as I said, strong growth, and particularly with the midterm elections coming up, we think there's going to be more fiscal and regulatory measures, deregulatory measures that support growth. Trump is focused very much on affordability right now. And the Fed probably is going to be politicized a little bit, allowing a few more cuts. Now, look, the other side of this that could play out, and if you look objectively at the US data, Prashant, is productivity growth in the US is picking up. It's now 2 consecutive quarters of over 4% productivity growth. We, and I think many economists, think it's a little bit too early for the AI theme to really be showing up in the productivity data. But maybe it is. The AI diffusion adoption has been much, much faster than the internet. It took 13 years for internet subscribers to get up to 800 million. For ChatGPT, it's taken 3 years. So maybe it's showing up in productivity earlier. And if that is the case, that's even more positive because the speed limit of the US economy, it can grow faster without generating the inflation. So I agree with you. It's a pretty positive outlook for asset markets. The risk, I'd say, is things are already very, very highly valued. And there is the risks around geopolitics. But, as a base case, I think it's kind of Goldilocks.
Hi, Robert. Good morning. Good to see you, Ben. Robert, I want to ask you, coming back to India then, the Indian rupee, that one is making everyone very, very uncomfortable, whether it's in the equity market or otherwise as well. So there could be a definite rationale to see the rupee slide from 88 ballpark to around 91.5, very, very quickly, I think in a matter of 2 months. What are you making of this sort of a move on the Indian rupee? And in that sort of a backdrop, what are you expecting from the central bank in 2026? We've got a couple of rate cuts. There were expectations of a couple of more. Inflation seems to be under control, but this rupee weakness could be a bit of a worry. Your take?
Yeah, so the rupee is, has been continuing to depreciate, record low against the dollar through 90. I struggle to see how I can link that up with economic fundamentals in India, which to me are very solid. And in fact, I would extend that to, many Asian currencies right now. I can point to the Korean won, which has been under a lot of pressure, the Japanese yen. But, Asia generally is fundamentally sound. And I did at the beginning highlight India as, one of our favorite economies for 2026. Now, when I look at India, one of the big changes is inflation. It is structurally lower. It's not just cyclical in our view, it's structurally lower. If you strip out precious metals like gold and silver from the core CPI, it's running at around 2.5%. That is very low, and we think this is not a fluke. We think India has had very prudent monetary and fiscal policies, and there's been a bunch of reforms, whether it's digitalizing the economy, labor market reforms, GST rationalization, opening up FDI to insurance. I could go on, but there's a lot of things that I think help explain why we have this better environment, better combination of strong growth, probably around 7%, maybe a bit higher this year, and low inflation. And, that's a very positive environment, I think, going forward for capital flows and the currency. So, our view for the dollar INR, we think by the end of the year, it will be around 90. So a bit of appreciation from here. Look, last thing I would say, historically, India has been a high inflation country, and that eats into your competitiveness and is one of the reasons why the rupee generally depreciates. If we are now, as we believe, in a new environment, a new regime of low inflation, perhaps even lower than the US, then there's no reason why the rupee has to continue to depreciate. So that's very important to appreciate. And we're a bit out of consensus here in that, I think the rupee and economic fundamentals, there's a widening gap that we think eventually will start to close.
Good. Rob, we'll leave it there. Thank you very much for joining us. It's a pleasure, and chat again soon. Thank you.
Thanks, Prashant.
Okay, we'll take a quick commercial break here. We're going to come back in just a bit. Let me just run you through what's coming up here over the next 2 hours. Now, 8:35, Jinesh Joshi of PL Capital, Interglobe Aviation's Numbers in Focus. 9 o'clock, conversation with Ashok Leyland Management. Remember, MNHCV sales are looking up. The last month has been good. 9:20, Harsha Upadhyay of Kotak AMC, Market Master of the Day. You have 9:30, management of Coforge coming up to break down the third quarter results. Cyient will be speaking with us at 9:40 on the third quarter earnings. Later on, we'll have the management of CAMS to decode their December quarter numbers as well towards the end of the program. Indian Bank management, again, on numbers, and of course, Outlook with Lata. So that's the lineup. All right, time to slip into a short break. On the other side, we go for tilt. On our top 10 segment, we're looking at DLF, Coforge, Home First Finance, Ensar Tech, Bluestone Jewelry. All of them will be reacting to positive news flow. Add to the list, United Spirits. On the flip side, Interglobe Aviation, Cyient, Premier Energies will be reacting to negative news flow, while you have a neutral reaction on Bandhan Bank. Take that break, come back, we get into further detail on all of these names.
Welcome back. Asia is mostly higher this morning. You've got green across the screen. On the Korean markets, that's gained close to about over 1%, taking its week-to-date rally to 3.5%. Japanese markets will be in focus ahead of the Bank of Japan decision. They're most likely to remain pat on interest rates, not tinker with it, but the BOJ decision is awaited. Hang Seng Taiwan also up nearly about 0.5%. But let's talk about stocks. It's a very earnings-heavy day. There are 3 nifty companies which report numbers later today, 2 of them tomorrow, and so many stocks to react to. This is our entire research team standing by with the CNBC-TV18 list of top stocks for the day. But the big one is going to be Interglobe Aviation. So Vinny, explain the numbers to us, especially in light of the cancellations that we had in the month of December.
Hi, Rima. Good morning. So, as expected, obviously, those cancellations that took place, the disruption that took place, we've seen that one-off that came in on the PAT front for the company. But despite this disruption, it's a decent quarter, and that's the highlight also coming in from most of the analysts. Now, revenue, that's a growth of around 6%. Forex loss, obviously, rupee fluctuation also is an important factor for them. So, Forex loss is what they've reported this time of around a decline of 24% on a year-on-year basis. EBITDA, that has also seen a bit of a decline of 0.8%. Now, obviously, factors like labor code, operational disruption, DGCA penalty, all these were the one-offs or the reduction in PAT was mainly because of this reason. So that is what we'll be keeping an eye out on. And in terms, when you look at it, what brokerages are also saying, whether you look at a Citi, a UBS, GS, all of them are maintaining their buy call, saying that Q3 was something that was already expected in terms to be a weak set of numbers. Near-term outlook also given by the management, that seems to be a bit muted. But medium-term outlook, that is strong. They continue to maintain their market share. So yes, despite all these disruptions, they managed a decent quarter. So maybe we could see a bit of red on the screen, and then the stock could see some green going forward in the day as well.
All right, Vinny, thanks very much for that. Well, DLF is the next one we want to talk about. Sonal is here with the numbers. Sonal, morning.
Good morning, Prashant. Well, the big headline from DLF is that they have turned gross debt positive for the first time since listing. This is in their residential business. They have a cash of 11,660 crore rupees now. Of course, it has the escrow amount from RERA to the tune of 10,433 crore rupees. But now they are debt-free. Yes, their operational numbers did not look so good. In fact, their new sales bookings were down 97% on a YY basis, 90% on a sequential basis. This is because the company had suspended bookings in one of their super luxury project, which is Dahlias, for a redesign, but they have restarted those bookings in fourth quarter, and they are quite confident of achieving their bookings guidance of 20,000 crore rupees in FY26. They have also reported record gross collections in quarter 3 at 5,100 crore rupees. Their 9-month gross collections are higher than FY25. So balance sheet has strengthened. Yes, on the booking side, it is a disappointment, but they continue to guide for 22,000 crore rupees of bookings in FY26.
Thank you very much for that. Lots of mid-cap IT companies will react to their numbers. You've got Coforge, Zensar, Mphasis. But let me begin with Coforge. Very strong revenue growth. Revenue growth has come in at 4.4% quarter-on-quarter, ahead of estimates of 3.5%. And the company has been clocking in very strong top-line growth. If you see the performance over the last couple of quarters, it's just a continuation of the kind of growth rates that we've seen. Some quarter bump-ups are on account of that Cigniti acquisition. Order wins, too, have been very strong. In Q3, order wins are now almost touching that $600 million mark. And the order book, which is going to be executed over the next 12 months, is up 30%. Margins have come in line with estimates at 13.4%. Profits at the bottom line are impacted on account of an exceptional loss. So the overall exceptional loss is 150 crore rupees on account of the labor wage bill. There was a cybersecurity amount that the company provisioned and Encora acquisition related expenses. But on the whole, operational numbers are strong, top line growth high at 4.4% and ahead of what peers have reported.
Okay, all right, Rima, thanks very much for that. Bandhan Bank, Home First Finance are some of the financials in focus. Gaurav is here. Gaurav, morning.
Well, good morning. When you look at Bandhan Bank, inline set of number is what we can call for the bank, and the reason being that Bank Street was expecting some kind of weakness, and they have delivered some weakness in the result. Net interest income, that declined almost by 5% on a year-on-year basis. When it comes to PPOP, that declined almost by 28% because the support from other income was missing in this quarter. And at the same time, in this quarter, there was also one-off gain in the other income segment at 126 crore rupees that company gained because of the sale of ARC. Now, if we exclude that, the core PPOP, that actually remained a bit weaker than the street's expectation. Now, when it comes to the PPOP, there was also another factor of 120 crores worth of impact. That is a one-time impact because of the new labor laws. But at the same time, provisions, they declined almost by 16% on a year-on-year basis, which resulted into profit declining almost by 52%. Now, what remained a bit positive is that net interest margins. Now, they increased almost by 6 basis points. It was in line with the street's expectation. But what management said is that going ahead, net interest margins will improve further because the cost of funds, they are likely to come down. So they are anticipating net interest margins to increase even after seeing 25 basis point of impact in Q4 FY26, the full quarter impact in Q4 FY26. And credit cost, that declined almost by 12 basis point, where management also suggested that in FY27, the credit cost will be in the range of 1.6 to 1.7%. But there is another argument. Nomura says that even though the valuation is favorable, the triggers for the stock are missing. Apart from that, let's go to Home First Finance. Good set of number, AUM increase of 25%. Disbursement was a bit weak if we compare with the expectation. But again, when it comes to net interest income, that increased almost by 50%. There was a lack of support from other income, which resulted into PPOP growth of 44%. And the same flew in profit as well. There also we saw growth higher than 40%. Now, what remained positive is that net interest margins that improved almost a 60 basis point on a sequential basis. And at the same time, credit cost remained stable, while ROAs improved sequentially. So all in all, good set of numbers from Home First Finance in this quarter.
Got it, Gaurav. Thanks a lot for that. Rima, coming back to you. Tell us about Cyient as well as Bazaar.
Well, for Cyient, it was an okay quarter. The company now basically reports their group numbers, which includes 3 segments, okay? DET, there is a semiconductor, and there's one more segment. So if you look at it on a consolidated basis, the company's top line went up by 1.9%, EBIT margins increased to 9%. Bottom line impacted on account of the new labor code. But the street focuses on the DET business, which is a driver of the company's revenues and profitability. So there, the company's top line went up by 1.9% and margins expanded by 25 basis points. And the company in the conference call said they're on track to exit FY26 on a strong note and achieve 15% EBIT margins by Q4 of next year. So all in all, it's a stable quarter. For Zensar, it's a mixed picture. There's a strong beat on the company's top margins, but revenues are subdued. Revenues have declined by 1.3%, but margins went up 200 basis points. And again, the bottom line has been impacted by an exceptional but very strong margin performance this time for Zensar.
It's a lot of tech, right, as we begin this session. Rima, thanks once again. Bluestone is what we want to focus on. I think the stock saw a big move yesterday. Mangalam is here with details. Mangalam, morning.
Morning. So, it was an 11% up move that we saw ahead of numbers. The street was penciling in good numbers because of the updates that came in from Titan as well as, Kalyan on Candir and Carrot Lane. And it was the festive season. Affordable jewelry in these gold prices definitely doing well. Additionally, inventory gains is something that aided their operational performance. So, 27% revenue growth is what the company has reported. But the EBITDA jumped 232%. And that's because of an inventory gain of roughly 59 crores. And as a result of which, there was a bottom line profit of 68 crores versus a loss of 27 crores same time last quarter. Same store sales growth was 12%. The company said that December exit revenue growth has also been 35%. So all those factors doing well for the company. But because the stock had seen an up move yesterday, it will be very interesting to see how it goes today.
Got it, Mangalam. Thanks a lot for that. And I think we'll have a chat with the management, Mangalam and myself, later on in the day. So watch out for that as well. But hopping across to Vinny. Premier Energies, Vinny, numbers look a little soft, right?
Yes, muted quarter is what we'd say is coming for Premier Energies. Missed the BBG estimates, analyst estimates as well. Overall, sequentially also, when you look at the margins, they've also seen a contraction. Though revenue on a year-on-year basis, 13% growth. EBITDA has seen a 15% growth. EBITDA margins marginally higher by a few basis points. So keeping an eye on that on a year-on-year basis. Profits, 53% growth there as well. But exports, they do not have much of exports. They're marginal, 0.some% exports is what is there. So that is the difference that comes in versus Premier Energies and Vari Energies, which we were talking about yesterday, which reported a good set of numbers. But Premier Energies, a bit of a miss coming in on that front, though order book value continues to be at around 13,700 crores and 9.4 gigawatt is what their order book was at the end of this quarter. But a bit of a concern in terms of execution is what we could say, and miss in terms of numbers that have come in on an overall basis. We could see some red on the screen here today.
Well, Vinny, thank you very much for that. No dearth of individual stocks and news flow or numbers for that matter. United Spirits is the last one on our list today. Mangalam, take it away.
Well, yesterday, last evening on Twitter, we had Adar Poonawalla put out a post saying that over the next few months, we'll be putting a strong and competitive bid for RCB, which is one of the best teams in the IPL. Well, CNBC-TV18 had reported this first in September last year, and subsequently USL also put its sports business under strategic review, which it believes will end by the end of FY26. So basically over the next couple of months, we will hear a lot more about this. Adar Poonawalla, among others, are also in the fray for this. The valuation anywhere between $1.5 billion to $2 billion. So the lower end of the range is probably priced in. The upper end is something we'll be monitoring. But what it also does is it allows a base price to be set for all the other potential deals. So, for instance, for United Spirits, it is about 16% of their market cap. But for someone like a Sun TV, it's 65% of their market cap. And earlier there were reports that, RPSG Ventures is looking to pair some stake or get in a strategic investor for Lucknow Super Giants as well. That they hold about 51% stake in Lucknow Super Giants. So given the current market cap, it's about 200%. But mind you, it does not take into account any sort of holding company discount. So that 200 number looks extremely big. But Sun TV looks like a bigger beneficiary of this than all the others by virtue of the size as compared to the market cap of these companies.
Well, unimaginable, right? Some of these numbers 10 years back, 15 years back, but it's absolutely out there. And it's a topic we'll sort of dig more into. That last table, really very, very revealing in terms of how large they are now as a contribution to their respective companies' market caps. Mangalam, thanks very much. We'll just quickly recap the stocks that we highlighted. The stocks with positive news flow: DLF, Coforge, Home First, Zensar Tech, Bluestone, and United Spirits. Interglobe Aviation, Cyient, Premier Energies are stocks with some red as we see it. Mixed view on Bandhan Bank coming in. Take a break. We are joined by Jinesh Joshi of PL Capital. We'll talk about Interglobe in a little bit more detail. Welcome back. 25 minutes to go for the pre-open session to kick off. Indigo reported a decent set of third-quarter numbers. Remember, lots of disruptions in early December because of the flights being cancelled because of the pilot issue. And so there's this one-off, etc. Let's listen into Indigo CEO Peter Elbers first up, and then we'll bring in an analyst to talk about the numbers and the outlook.
I think it's important to highlight that the major operational disruptions for which we have been profusely apologetic took place on December 3 to 5. 3 to 5 December, we had a total of 2,500 flights cancelled, affecting some 3.5 lakh customers on those days. And actually, pretty swiftly thereafter, we have restored our operation and brought it back to stability and normalcy. And in due course of the month of December, we came back to roughly 3.8 lakh customers a day. And despite some of the weather disruptions we had in the second half of December, it has actually started off quite stable since we declared the operation back in stability around the middle of December. We continue that trend in the month of January. We have a very stable operation now and obviously start to prepare for the month of February to continue that very stable trend. There's the currency movement pertaining to the dollar-based future obligations. We've had that explanation before, and with the development of the Indian rupee as compared to the US dollar, we have to take another 1,000 crores in this quarter on that side. And the exceptional items related to the operational disruptions, which are accumulating to 577 crore for the quarter itself.
Okay, Jinesh Joshi is with us. He's research analyst at PL Capital. Jinesh, good morning. Good to have you with us here. Thanks for joining in. So, I mean, Indigo numbers, even otherwise, and this quarter, of course, was exceptional because of everything which has happened. But I mean, the numbers, the reported net number fluctuates wildly. Has fluctuated wildly. What did you make of the quarter and where we are in in the fourth quarter already? I mean, prospects going forward.
Sure. So see, I think this quarter was marred by one-off. There was 1,100 crores of FX hit that the company had to take because of depreciating rupee. And there was a 1,500 crore one-off also in this quarter. But if you adjust for this one-offs, I think the PAT of 3,100 crores that the company reported was way higher than our estimate as well as street estimates. Now, given the fact that there were disruptions in the month of December, I think the numbers that they have reported in this quarter, I think they are quite good, so to say. But as far as the near-term guidance is concerned, I think for 4Q, that 10% ASKM guidance obviously takes into account the capacity constraints that are going to come in because of the new FDTL norms. So it remains to be seen as to how the capacity expansion shapes up, especially in 27 and 28, given new norms will come into place. So yeah, that is something which will be keenly eyed. We are at about 10% ASKM CAGR for the next couple of years.
Jinesh, if I remember correctly, you had downgraded Interglobe Aviation in the month of December to a hold?
Right.
Okay. But first, just tell us, in Q4, how is the performance likely to be? Because I remember Kumbh was last year through January and February, and there was a massive spike in travel demand, so numbers would be boosted. So Q4 numbers would be impacted by a high base effect. So how is it likely to perform in Q4 near term? And you spoke about how these FDTL norms will impact, it's a structural headwind. It will impact maybe FY27 and onwards. So what are your numbers? And at what point would you look at reinstating your buy on Interglobe Aviation, considering its dominance, expansion internationally, etc.?
Sure. So if I talk about 4Q, I think the 10% ASKM guidance that they're giving, we are more or less on track. And again, what will happen in 4Q is that you will see a mid to single digit kind of a moderation in PRASK come through, because the base of 4Q FY25 was very high, given the fact that you had Kumbh Mela at that point in time. But nonetheless, overall, I think a 10% ASKM guidance in a constrained environment is definitely good, if not very good. So taking that into consideration, I think the numbers in 4Q will be decent, at least on the EBITDA side. But as I highlighted, that the long-term challenges with respect to capacity constraints do prevail, and at this point in time, it is slightly difficult to preempt as to where that growth number could eventually settle. But we are building in a 10% ASKM CAGR for the next couple of years, which effectively results in a kind of a flattish PAT growth number for the next, say, maybe 2 to 3 years. Yeah.
Got it. All right. Hi, Jinesh. Good morning. Good to see you. And I think in terms of deliveries, if I got that number correct, I think they're expecting, one per week for the next 5 years, if I remember correctly. That said, as Yuma mentioned, you have a hold on the stock. What will make you turn positive from here on? Will it be earnings? Is there a couple of tailwinds in store? Or is it a valuation argument? Go ahead.
Yeah. So I think tailwinds in earnings is one thing which I would essentially look at. I think one factor which perhaps we have not discussed is the inflation in the cost structure that is seeping in, given the fact that there is significant rupee depreciation. I'm not talking about MTM gains or losses that we adjust separately, but a depreciating rupee hits you on the P&L side as well, because most of your costs are dollar denominated. So I think that is one area where we are finding some bit of a concern coming. And I think when we turn positive is that if we get some comfort on ASKM side, that 10% number is something which we are building in. But if we get more clarity on that side, is something where the EBITDA jump can essentially come through. And again, on the pricing side, that 4Q guidance of mid to single digit moderation in PRASK is something which I found to be slightly negative. And if we get more comfort on pricing, which is slightly difficult to preempt, I think these are the 2-3 things that we will eventually look out for. Capacity is one which they can obviously navigate by damp leases, so that may not turn out to be that big of a problem, but then ultimately that will have an impact on margins. So it's a trade-off between capacity and margins is what I feel. And I think while from here on a 5 to 7% correction or maybe a 10% correction, just in case if that happens, that could be a very good entry point is what I feel.
Jinesh, when this entire December issue happened, many were of the view that for marginal players like SpiceJet, I mean, if this was a moment to shine, this was it. And they had to seize it. Your assessment briefly, anything happening there or will happen, can happen?
I don't cover. What I can tell you is that a 10% effective cut in the winter capacity means that those slots will effectively go to other airlines, which obviously means that okay, they have some market share to capture. But given the size of Indigo, I mean the 65% market share that they have, and effectively that one plane per week that they are effectively going to get in terms of organic induction, that puts them in a very good space as far as the capacity addition is concerned, despite the challenges that we are seeing due to FDTL norms. So difficult to comment on the peer side because I don't cover SpiceJet, but overall, yes, a 10% winter schedule cut effectively means that that capacity will go to the other players in the industry.
Okay, Jinesh, thank you very much. Good speaking with you. Appreciate your time here on CNBC. Siddharth Khemka is going to be with us on the other side of this quick commercial break. GIFT Nifty, we'll just leave you with that. And I think it's still a flattish, neither here nor there kind of a open, the indicative that is. Coming back with Siddharth.
Welcome back. We have Sid Khemka, Motilal Oswal Financial Services, who joins us on the show. Hi, Sid. Good morning. Good to see you in. Let's talk about United Spirits since it's a Friday and since there's some news that came in overnight. The numbers are a little bit disappointing. The sector has actually got a bit of a D-rating. Looking at all the alcohol stocks post what happened with the cigarettes, with regard to that tax that came in, the street is fearing something or the other will happen from various states with regard to duties on alcohol. And that's why these stocks have corrected 10, 15, 20, 25% as well from the top. Now, United Spirits, the numbers are a little bit weakish, as Mangalam told us. However, now there could be some value unlocking because RCB, after winning the cup, there's a possibility it gets sold out. And it could be $1 billion to $1.5 billion, which Mangalam says is around 15% of the current market capitalization. What's your view on the stock with regard to business and this additional tailwind that's coming in?
Hi, good morning. I think if you look at the overall results, definitely the soft volume performance and the heavy advertising spends that dented the margins in Q3. Overall, what we see is that for our estimates, we are broadly remaining in line with what we are expecting. Maharashtra, especially, and AP, that weighed on Q3 performance. Apart from that, I think United Spirits delivered healthy performance in the rest of India. I think the latest news that's definitely positive because the core performance remains slightly muted. One good numbers that came in from Radico in that space yesterday, that came much above what the industry has been reporting so far. So there is definitely some room for growth even for United Spirits, where they have been pushing in for the uptrending and the premium products. So I think a value unlocking, that is a big that is a more of a sentimental trigger compared to the core business, which is kind of a big trigger. And we believe that the news flows can be driven only from the short-term perspective. For the next few quarters, we'll definitely look at the numbers improvement. So for now, we have a neutral rating on United Spirits, but looking at Radico, where we have a very strong buy, I think numbers have been much above our expectations. The gross margins has seen a sharp improvement, and both volumes growing at about 17% compared to United Spirits, where the volumes declined about 3%. I think one can clearly see the favorite from this pack for us is Radico Khaitan.
Yeah, no, absolutely. Sid, if I can quickly okay, let me do one thing. We'll play out because IIFL our results were great and the stock crashed 15%. We had Nirmal Jain with us. We'll play that soundbite out. I'll play it out as I'm told it's ready. So just a few other things before we get to it, right? Credit Access, sharp move higher yesterday in the MFI space. This is, of course, also as a result of numbers. Bajaj Consumer, phenomenal numbers. And again, the stock went up very, very sharply. And there was Canada HSBC Life, which was the other one, which was up 10% in trade. Any thoughts, coverage, or view on any of these three?
Yeah, I think the names that you take, credit access results have been improving. The cycle for the MFI space, that is seeing some improvement, and definitely I think we are at the cusp of at least the bottom out process for the space is started to happen, and some of the names that we are liking from that space. Even today, if you look at, we have upgraded a Bandhan Bank from a neutral. For last 5 years, we have been having a neutral rating on Bandhan Bank. Today, we have upgraded the stock to buy within the same space. Valuations look very reasonable. FY27, we expect Bandhan Bank ROAs to see a strong recovery from about 0.8% to about 1.3, 1.5%. And so with the improvement in growth as well as profitability, we believe that the bank trading at less than book definitely has a lot of room for upside. So Bandhan Bank is something that we like from that space. We have just upgraded to a buy with a target price of 175.
Okay, all right. What about PNB Housing Finance? That one yesterday came in for a sharp knock. The street is divided out there. Some believe, the observations with regard to that fraud that was reported, it could dent sentiment. Well, others say this was already known. This was a few years ago, and there's an adequate provision. Yesterday, the street didn't buy it, though. Stock was down 8%. I believe the stock now trades around 8 to 9 times. So valuations are in favor. And we have, new person at the head. So what's your view on the stock after the kind of correction we've seen?
Yeah, Nigel, I think there is a transitory bump that we're seeing in PNB Housing Finance, NIM pressures as well as elevated payments, weak loan growth, and despite that, asset quality has been kind of stable. So what we expect going forward is that the transitory bumps ahead in the form of NIM pressures that we believe could see some improvement from the emerging and the affordable segments that could deliver a healthy retail loan growth of about 17% over the next 2 years. NIM stability, that is something that needs to be seen, and that will be a key factor for the next few quarters. Plus, the new CEO now in, and we believe that leveraging on his acumen as an experienced mortgage lender, that could be another factor that the market will definitely watch out for. Yes, valuations are attractive. I think the execution is now the key. We definitely recommend a buy rating on PNB Housing Finance. We believe that the transitory hurdles, once the company is process these transitory hurdles, things should start improving. The bank should, the company should start delivering on the promise, and then market will start rewarding the stock.
Thanks for that, Sid. Stay with us. Just a bunch more names, right, which went up yesterday and volumes went down. I mean, basically price moves with volumes is what Hormus focuses on. He's here with us. Hormus, take it away.
Good morning, Prashant. And Vari and Premier, of course, they continue to remain in the spotlight. Yesterday was Vari's earnings reaction. It was the biggest single-day move in terms of price action and volumes in the last 7 months. 9% higher on the stock yesterday. There was a top gainer on the Nifty 500 as well. Now, coming into yesterday's session, the stock had declined in 4 out of the 5 previous ones. And yesterday, we had close to almost 1 crore shares being traded. The 20-day average here is only 13 lakh shares. However, despite those 1 crore shares being traded, only 11% of those, 11.5% was marked for delivery. So close to 12 lakh shares were marked for delivery. The 20-day average is 3.5 lakhs. And the stock has been beaten down, almost 30% lower compared to its 52-week high. Eternal was the other one. At one point, the stock was up 7-8%, then ended lower by 2.5% in yesterday's session. There was very heavy trading activity seen there, and the volumes were the highest in the last 3 months. 15.5 crore shares were traded yesterday on Eternal, the 20-day average being close to 4 crore shares, and trading volumes worth over 4,500 crore in yesterday's trading session, and out of which 44% of that was marked for delivery, and close to 6.5 crore shares were marked for delivery, the 20-day average being around 2 crore shares, and the stock itself is down around 25% from its own 52-week highs.
and talk about two extremes, both not earnings reactions per se, but Bank of India was an earnings reaction, and Kalyan Jewellers continues to fall for the 10th day running. Bank of India was at a 52-week high. Kalyan Jewellers is at a 2-year low. And yesterday's session for Kalyan Jewellers, we had close to 2 crore shares being traded, and out of those 2 crore shares, 45 lakh shares were marked for delivery. And same is the case for Bank of India as well. Over 4 crore shares were traded yesterday. Now 4x its 20-day average, and out of those 4.5 crore shares, close to 1.5 crore shares were marked for delivery as well. So delivery-based buying seen in Bank of India, can't say the same for Kalyan Jewellers.
Thank you very much for that. We will get into a break, Harmis. And on the other side, we'll come back with the pre-opening rates. We'll also get in a few technical trading ideas. Sudeep Shah of SBI Securities, Mitesh Thakkar, as always, will join in. Welcome back. 20 minutes to go for markets to open. Yesterday was a good session. The Nifty managed to close with a gain of nearly 150 points, ending closer to above 25,250. Where do we go from here? Sudeep Shah and Mitesh Thakkar are now joining in. Gentlemen, good morning. Mitesh, let me start with you. Do you expect the rally that we had, the rebound that we had yesterday, to extend itself today? The GIFT Nifty is suggesting a flat start, but do you think it will be a stronger session?
Good morning. So I think, the index apparently to me has just declined a lot, has run away from the short-term averages, so it's just stopped falling. The idea that it's very oversold, and while the PCR also, was indicating that a couple of days back it's recovered a bit, but it's also towards the lower end of the typical areas from where the bounce back happens. So I still believe that on the upside, 25,400 remains the pivot. Until that has been crossed and we get a closing above that, I think the structure will remain weak and you will keep getting bounces of pullbacks. But broadly, if we don't get past 25,400, good chance that we'll not only retest 24,900 odd levels, 920, which is what we went low at, and maybe even break below that and head towards 24,600, 650. So that's the view. But keeping a close watch on 25,400, which was also the high, intraday high yesterday.
Yeah.
Sudeep, what would your Nifty call be?
Good morning, Rima. Rima, see, what I feel is that 25,450 for me will be a very important resistance to cross, because that were pivot points on 12th of Jan, as well as the fall started on 20th of Jan from the same level. So 25,450 for me will be a crucial resistance. And I feel it's just because of the oversold nature of the markets, we may see some kind of a mean reversion move, but nothing too bullish about it. But overall, the range will be 25,100 on the downside and 25,450 on the upside for today as well as Tuesday. That is what I feel on Nifty.
Sorry, what is that level?
Good morning, Prashant. Prashant, that would be around 25,050, 25,100 on the downside. That would act as key supports.
Okay.
And on the upside, 25,450, 25,470 will be a critical resistance to watch out for.
Got that. Mitesh, you'd look for longs or be careful still?
Still careful though. I think on individual stock basis, we have had some long positions because a lot of stocks have come to support. Some stocks are not falling in the declining market. So today I have a call on APL Apollo. I think, post the numbers, it bounced back pretty strongly from the 34-day moving average area. I think this should see further upsides. I would look at targets in the range of about 2030 here and recommend a buy with a stop below 1949. Similarly, FMCG is doing well. If you look at, Dabur, Godrej Consumer, etc. So Dabur is one which I've chosen today. If it gets past 527, 528, which is the intraday pivot, buy with a stop at 519 and look for target of 545. On the sell side is SBI Life, sell below 2015, keep a stop at 2040, look for targets of 1960, and Novama is a sell as well. Keep a stop at 1403, look for targets of 1340.
Sudeep, what about you?
A couple of buy calls. The first one is Indian Bank. Yesterday it had its results. The results were very good and we've seen a breakout above all previous highs. So here we feel that there's a strong long build-up backed by good results. So 870 will act as a stop loss on the downside, and we feel the levels of 940, 950 could be the immediate targets here. The second stock that we like is BEL. Now, this stock from the defense pack is the only name which has outperformed the entire defense index, as well as it is holding its key level around 405, 400 levels on the downside. Any dip towards that is acting as a buying support. So on the weekly charts, there is immense strength, and we feel that 407 will act as a strong support that can be the stop loss also. And on the upside, the targets of 430, 435 are likely in the coming week.
Okay. Mitesh and Sudeep, thank you very much, both of you, for joining us. More later in a bit from now. Well, let's shift focus and let's talk about the MNHCV, that is medium and heavy commercial vehicle segment. Ashok Leyland is reviving its Taurus and Hippo truck range, marking a re-entry into the CV segment. My colleague spoke with Sajeev Kumar, president of the MHCV segment, on the need of the hour for the industry and, of course, the company's outlook for this coming financial year. Listen in.
Last quarter has seen government really showering all kind of support for CV industry. We talk about GST rationalization, we talk about interest rate reductions, and then, as you rightly mentioned, government focus on capex infra is really very high, and we are seeing huge investments coming on infra, both in terms of roads and other infra which is getting created, and this is really helping the industry. So beyond this, I think the major challenge which industry sees right now is average age of the fleet. That average age used to be somewhere around 8 years. Now it has gone to 11 years. This to me is worrying factor, because a lot of old vehicles are there in the I would say which exist today. And when you look at cities like, let's say, NCR, we keep hearing about the air quality, we keep hearing about the pollutions. So I think government needs to come out with something which can really help address issues related to pollution, issues related to the overall age of the fleet, and maybe industry along with the government can create a an approach which can really incentivize these operators to kind of move towards replace their old fleet. And once this happens, I think it will help the overall industry also, it will help the logistics sector also, and hopefully address the pollution issues also. Quarter has completely changed the scenario, and I think we went through a huge growth and momentum in quarter 3, and we expect we are seeing the signs where quarter 4 is going to be equally good. So I would say that if you recall, 22-23 went through a huge period of growth. Almost 46% growth was witnessed by the industry in 7 to 55 ton, and then we were kind of stagnant with plus minus 2 to 3% kind of growth. But this year itself, we expect the industry to grow at least 8 to 10%, which is very good as per CV industry standard. And I feel that this momentum is going to continue next year also. So I would say good days for CV industry.
Yesterday, there was a Nomura upgrade or a bullish note coming through on MHCV with names like Tata Motors, Commercial Vehicles and Ashok Leyland. And Ashok Leyland, I think, did well yesterday. It was up close to about 3.5%. In pre-open, Home First Finance looks like it's going to have a pop to begin with. Numbers are strong. Bottom line went up by 45%. And Bandhan Bank, too, could open with strength. And Zensar and Coforge are the other two mid-cap IT companies which should have some green as they begin trade. Siddharth, lots of mid-cap banking numbers have come through. Now, the expectation is that banking numbers will lead the recovery. NIMs are close to bottoming out, etc. What is your overall analysis of the banking numbers in line with estimates? What were the key trends that you've observed, and your top pick?
Rima, I think if you look at a lot of the banking numbers are clearly showing that the credit growth is definitely picking up. NIMs are bottoming out. And if you look at even on the cost side, there is a lot of control that is being put in, and plus on the funding side as well, the CASA contribution is improving specifically for large banks like HDFCs, where that was a big concern. So overall, we believe the large banks that will continue to do well. For example, we continue to like ICICI, HDFC and SBI from the large cap side. Mid caps are seeing a lot of enthusiasm. They are seeing a lot of improvement in growth. Again, there something like a AU Small Finance Bank and Federal Bank. These two are our top preferred picks from the private banking side space. While on the PSU banking side space, I think Canara Bank as well as Union Bank, these two would prefer among our top picks.
Sid, point taken. You know, what we're going to do, Sid, stay with us, is play out some of the big corporate voices that we got from Davos yesterday, and a bunch, right? So we had Bharati's founder and chairman, Sunil Bharati Mittal, on a bunch of things, but tariffs, and he put it very sharply. He said, well, tariffs, the guidance was 300 rupees in ARPU, and that was about 8-9 years back, and he's still kind of sort of eyeing it. Of course, with inflation, that number, that aspiration should have been much higher. But, well, he's not looking to bump that number up in terms of an aspiration, but saying, well, it should come, it must come. Listen in.
For $200, you're giving everything away. Just to win more market share is unsustainable. Something has to give. And we are seeing now from 12 operators, we are down to 2 operators plus 1, which is trying to make a comeback. I personally believe time has come for this to be a crowdsourced event where the whole country can benefit from a very strong digital infrastructure highway in which everybody is contributing 20-30 rupees a month to consume ton of data and enjoy many services that they need for everyday life. So I think I'm hopeful that sometime in 26, we may yet come to the point of touching 300. We have always said 3 plus 1 is good for India. It's a large country. World over, you see 2 or 3 operators. But for the size of India, I think 3 plus 1 is a good place. And we are hoping that Vodafone Idea will start to, be more active in the marketplace. They are welcome. There should be 3 operators. Keeps everybody, in the right place from the customer point of view. And from our own standpoint, we are hoping, we have written to the government that AGR was our issue as well.
Yeah.
And we hope we get attention from the government.
Have you heard from the government at all?
Not as yet. We heard from the minister yesterday. He mentioned that everybody needs to follow the route that Vodafone Idea followed, which is via the courts.
Okay, well, that's Sunil Bharati Mittal. Now, the country's largest oil marketing and refining company, IOC, chairman, spoke with my colleague Shireen as well. The big fear with oil marketing companies has been whether the government will increase excise duty. The chairman of IOC addressed this issue. Listen in.
One overhang that continues to weigh on your stock is the possibility of an excise duty hike. Is there any indication at this point in time that that is likely, given the fact that we've seen crude oil prices coming off so sharply?
I don't know from where these things come. I have no indication of it. And to make it very clear that it is a very simplistic view that is propagated that if crude prices are so and so, the pump prices will be so and so. If it is $100, then the prices will be high, and if it's $60, the prices will be low. Please understand and please propagate this, that it is not so simple, because the more important factor is how the cracks are working in the international market. What I am getting by processing 1 ton of crude or 1 barrel of crude, how much of MS or diesel I get it, and how much is that differential going there. That differential is what is affecting the prices on the pump, not the $65 or $100.
Okay.
So it is not a very simplistic thing to say.
So you're saying unlikely or not in the offing or not at all
I have
at this
no
point
indication
in time?
at all as of now, that much I can say.
Well, Shireen also spoke with C.S. Sethi, chairman of State Bank of India, on the surge in foreign investment coming into Indian financial names, both banks, of course, NBFCs as well. And what's next? Listen in.
One is the foreign investors are much more confident about the Indian banking system today, and they're willing to bring substantial capital to that. And some of these banks where the FDI is coming in have the potential to scale up their operations with the capital buffers, what they can create. I think it's a very good development in my view. I don't think we are in need of capital at this juncture. And we also have very strong internal accruals, the capital augmentation which happens through the clawback of profits is significant for us. So, and we are also planning, as you are aware, the divestment in SBI AMC. So that will also be capital augmentative for us.
Okay, those are the three big top voices as far as corporate India is concerned. All three nifty companies. Well, shares of IIFL Finance fell sharply yesterday. Remember, the company reported a great set of numbers, but communication from the IT department that there is a special audit which is to be conducted, I think spooked markets. This morning, the stock is up 2% at the end of the pre-open session. So Nirmal Jain, founder of the IIFL Group, came on immediately as the results came and this news broke. So just want to play out a quick soundbite. He, of course, called it entirely procedural.
Section 142A is for complex accounts. And in our case, when the gold loan business has more than 6.5 million customers, obviously that requires certain, and this thing is very procedural. And whenever after search they do a block assessment, they do it for 6 years. So there's nothing unusual about it. And in terms of the block assessment period, I think we have done the reassessment and there's 1.2 or 1.3 crore rupees of tax has been paid. But other than that, I think anything is speculation because the special audit, if you read 142A, it talks about accounts or inventory valuations which are complex. That's the time they do the special audit. Or that is when if department is not able to do with their own resources, they can appoint a chartered accountant. And so, a CA firm has been appointed. They've been given mandate for 60 days time to submit the report. In the income tax search, the standard procedure is this, that there's a search department, they make the appraisal report, which they send it to central department. And based on that, they basically ask you to submit the revised return. And then when the revised return, the assessment and everything is done for a block of 6 years. So there's a revised return that we have submitted for, and we have paid them some small, it's a very nominal amount of extra tax that we have paid. And when the assessment department, when they have complex accounting or whatever, then they can appoint a special auditor. But as far as we are concerned, we are, as a company, we are 100% confident that there's no further liability we expect on this account. I don't think there's any business restriction or penalty will come from this. So what happens is that income tax department, once they got a special audit report, based on that, they can accept our revised return or they can challenge it. If they challenge it, then you can go and appeal. And so there's a procedure for that, but I don't think any penalty or any business disruption we can is legally permissible under this.
Well, the management reiterated that it's all procedural. They went on to say that under Section 142(2)A, the tax department appoints an independent chartered accountant, as they've done in their case, if they find the accounts too complex. But it could be a bit of an overhang. Yesterday's stock was down 15%. Pre-open suggests that there will be a mini rebound of about 2%. Mitesh is back with us for his 9:10 call. Mitesh?
So, I'll go with a buy on APL Apollo.
APL Apollo. And numbers are also looking strong for APL Apollo. But Gaurav, it's over to you now for Paytm and Aditya Birla AMC. What is the brokerage call?
Stocks will be on our radar, and this is from the brokerage's point of view. First is that Paytm, because Investec, they have now initiated a report with buy rating and a target price of 1,550 rupees, which suggests more than 20% upside even from this level. What they're saying is that company has a tech which is very capable, and at the same time they have strong merchant relations, and that is the reason why the structural support for the company is very strong. They also believe that the merchant acquisition is already done for Paytm, and this will actually help the Paytm because the digital first model helps the Paytm to get as a substantial operating leverage in the business. Lastly, based on all these factors, they are forecasting around 23% growth in the revenue, and at the same time margins, the EBITDA margins are likely to go almost to 24% versus what it was at 8% in first half of FY26 according to Investec, and that is the reason they have a buy call on this stock. Other than that, Aditya Birla AMC, now Citi, has upgraded the stock from sell to buy, and they have also given a target price of 900 rupees. Now, what Citi is saying is that for the last few months, we have seen the performance was a bit tepid, and this was because of the weakness in the performance of the equity schemes. But now the performance has been stabilizing, market share has started stabilizing for the company, and this is a key reason why they are actually upgrading the stock. What they're saying is that they're seeing some equity flows which are improving and also sustaining for the company, and they are also expecting these flows to continue. Lastly, if you look at the management commentary as well, management has indicated that there will be reduction in redemptions and there will be flows, net flows, which will increase, and that is the reason why what Citi says In fact, the execution still remains a key, but the aggressive sales engine and sustainable performance trend are likely to push AUM further, and that is the reason why they have upgraded the stock to buy. So all in all, both these stocks will be on our radar on the back of the bullish call coming up from brokerages.
Thanks a lot for that, Gaurav. Well, I'm focusing on APL Apollo Tubes. The numbers came in yesterday and the street really liked it. What did the street like? The EBITDA per ton sustained above 5,000 rupees for the second consecutive quarter, with volumes at around 920,000 for the past quarter. And the December run rate as well is going at around 1 million tons. So the street clearly likes that on a quarterly run rate, 1 million tons. The other factors as well, net cash of around 560 crores. The net working capital days remains very sleek at around 3 days. Those are the other data points as well the street liked. And now they have confidence. Existing capacity is 5 million tons. They've laid out the roadmap for another 3 million tons odd, and they're proposing that the capacity by 2030 goes to 10 million tons. So they're clearly seeing a good runway. The management, they went ahead and they've gone and raised their EBITDA per ton guidance for the fourth quarter as well as for FY27. Now they're working with around 5,500 rupees. That's an upgrade from around 5,000 rupees at their upper band that they were guiding earlier. They also stepped up their volume growth guidance to around 20%. But all this together, brokerages like what they're seeing, whether it's UBS, Equirus or Nuvama, they've tweaked their estimates, and some of them have tweaked even the multiple that they're willing to give. A case in point being a Nuvama, they have upped their multiple to around 40 times. So put everything together, APL Apollo Tubes, one of those few stocks that are at a 52-week high, and the street is clearly differentiating the men from the boys right now. Market leader, stock opening up in the green.
Okay, well, I think we've got the first rates coming up on your screen anytime now. 25,330, down about 0.1, up about 0.2%. So it's a continuation of the move from yesterday, but I mean, it was not without, of course, setbacks intraday yesterday, right? I mean, up and down. Sold off at one point with only about 20-30 points left, and then we finally ended with 150, 160 points on the index. 25,300, so it's now gone flat. 20-point change. The Nifty Bank is up 0.2, 59,300. The sensex is absolutely flat, 30-odd point change. Mid-cap index is turned red, but just 10 points lower. The small-cap index will come up as well on your screens now. So that's that. I mean, it's 2:1, at least for now, in terms of market breadth. Advances to declines, so it's a decent start. So 15, 16 names are higher, but the rest of the names are lower. There's Trent and Dr. Reddy's on one end. There's Indigo, Adani Enterprises, and ONGC on the other end of the screen. And it's an absolutely flat kind of open now with a 1-point change to show for it. So that's the Nifty heat map. But I guess individual names, single stocks, lots of action. Rima.
Indeed, but you would have liked to see some follow-on buying after yesterday's up move. Week to date, the Nifty is still down 1.5%. The mid-cap index is down 2.8%. Sectorally, this morning, it's IT and metals where you are seeing buying. Both the indices are up 0.5%. Banks are managing to hold up in the grain, but just by a sliver. Some capital goods, capital market plays are up and about. On the way down, realty continues to get hit. Nifty Realty Index is down 11.5% since the start of 2026. So after last year's underperformance, realty continues to remain subdued. Talking about gainers, Dr. Reddy's was the big mover yesterday on the back of its Q3 positive surprise. Stock continues to see buying, 1.5% up. In IT names, it's TCS Tech Mahindra, where there is interest in the large cap space. Emphasis came out with numbers, steady set of numbers, and stock is seeing some buying. And we should pull up a Coforge as well, because that will be reacting to numbers. Numbers are fine, bottom line impacted by the new labor code that has impacted the bottom line. But Coforge has been a rank outperformer, and they still have to digest the large Encora acquisition. Hindalco, HDFC Bank, Geo Financials are some of the other big movers. On the way down, Interglobe Aviation has taken a knock this morning. Operationally, numbers are resilient, but the bottom line has been hit by a one-off of 1,500 crore rupees, and stock is weak in trade, nearly 2% lower. SBI Life, HDFC Life, weak in trade. Eternal sold off 10% from the day's high yesterday. Maybe the street didn't like the leadership change and the transition, and Eternal is seeing another day of red right now, 1% down on that.
Well, that's right, Rima. Plenty of stocks doing a thing of their own in today's trading session. Just pull up a couple of these names. Hindustan Zinc, that's following the surge that we're seeing in zinc price. I think we're nearly around $100 per ounce. So that moves in tandem with that. I'll keep an eye out what the promoter entity is going to do, because at these lucrative prices, will they come in there and sell a couple of percentage? Well, we'll keep an eye out on that particular one. What else? IFL Finance, clarification coming in from Mr. Jain. You're on CNBC-TV18 in closing bell yesterday. The street's taking note of it. Yesterday, it made a low of around 515 rupees. Today, at around 550 rupees. So clearly, the street is willing to look through past this, at least as of now. We have Tanla as well. You know, the stock, in fact, is up close to around 5%. Good volumes is what we're seeing on that particular counter. So that stock, in fact, up and about in today's trading session. 6.5%. Big move. Volumes as well fairly decent. Suryodaya Small Finance Bank. That stock is getting a bit of a knock. It's down. I think the NPA is moved up to around 6.7%. That compares with around 5.9%. So on the back of that, stock pulling back. Suryodaya Small Finance Bank. Let's get that up. 5% down on that particular name. Tanla, by the way, is reacting to its results. So that explains why that stock's doing well. GSPL, revenues declined by 2.5% quarter on quarter, and EBITDA as well was down 1.5%. So that's down, I think, close to around 4% in initial trade. Net is a start in the red. Par for the course, one would say. You don't want to break yesterday's low, and from a bullish perspective, you'll want to get past today's high as well. Prashant.
No, it's absolutely. I mean, it's a tentative start, right? We'll see how it goes. But point is, you're also now going into a 3-day weekend. Monday is a holiday because of Republic Day. So when we come back on Tuesday, there will be 2 days of global markets to react to. And then, of course, I mean, you'd be right. Right, you'd be sort of standing right before the budget, which is on that Sunday. So yeah, I mean, lots of cues, I guess, to deal with. On the downside, I want to take a quick look. Premier is down 3. Syngene is down about 2%. Bharat Coking Coal is coming up with some volumes, not very large, but it's number 4 in terms of volume-led losses, 2.5% lower, about 37.38. Lodha is coming up with about 1.75% cut. Radico went up sharply, is down about 2%. Gokuldas is down 2.5%. Gokuldas ended up about 6%, so there is some profit booking. We had EPAC Prefab yesterday joining us. Stocks down about 2%. Vari went up like a rocket yesterday, 2% lower. So yeah, I mean, it's tentative. And I think all these silver ETFs, right, silver and gold ETFs, we should once again have them at the bottom of the screen. So the number one volume-led gainer is the silver Bs, 9% higher. The Starter Silver, Gold Bs, I mean, you name it. It's all that entire pack. Look at that. Just complete U-turns after yesterday. Silver, of course, underlying silver prices have seen a very sharp move once again. Hindustan Zinc, Nigel mentioned 4%. Hindustan Copper is up 2.5%. IIFL 3% higher. Bajaj Consumer went up, I think limit up yesterday after the results, 3% in the green. So it goes. 20 points lower is what you have. Nigel.
Just one stock, APL Apollo Tubes. We didn't highlight that in a market like this. A stock that didn't do anything for very, very long. I recall the promoter entry came and sold a small chunk as well. And the stock, you know, just absolutely didn't do anything for the last few years, actually. It did around 1,900 rupees and then it didn't do. Today, in fact, it's making that point. You know, separating the men from the boys. We had the smaller names, High Tech, JTL, all of them came and raised some money. But this one has held its own. It's making a fresh 52-week high, and it's reported its best earnings, in the last 2 quarters. So I think quality now is going to be standing out from here on. The largest player and stamping its authority.
And Aditya Birla AMC, another stock that Gaurav was earlier highlighting, the double upgrade from Citi. Aditya Birla AMC has also started trade with a gain of about 5%. It's been an underperformer compared to the other AMCs, both stock-wise and even in terms of financials compared to ICICI Pru, AMC, HDFC. But Citi now betting double upgrade now on this stock.
Harsha Upadhyay is with us, Chief Investment Officer at Kotak Mahindra Asset Management Company. Harsha, great to have you with us here. Thanks very much for joining us. You know, it's been, this week was, and actually the end of the previous week and the beginning of the first few days of this week just looked very painful and gripped by fear. Of course, I mean, as we end this week, it's looking a lot better. But is it going to remain a little better relative? It's all relative. Or you think we are still not out of the woods and there will be these bouts of severe selling? What's your sense?
Good morning, Prashant. See, as far as market is concerned, it seems to be more of the same. The volatility has continued into 2026. We are in the middle of the earnings season. Earnings season is expected to throw up a decent recovery compared to first half, in our opinion. It will not be very, very significant uptick, but definitely there will be signs of improvement in terms of earnings trajectory, at least for the large caps and certain mid caps in our view. That should help markets to take some support at lower levels. However, when you look at international news, that's not been great. Every few days, we have been hearing some negative of the other. So to that extent, given the fact that valuations are still at around long-term averages, and the fact that earnings are still at the nascent stages of recovery, we are likely to see a similar kind of market movements over the next few months as well.
Harsha, where do you stand on realty? It's been such a tough beginning to 2026. The index is down 10%. Individual stocks are down so much more. What is the call you all had on real estate? And now, given the underperformance from last year and now, including 2026 so far, would you have a relook at real estate?
Rima, we have been underweight on real estate sector for quite some time now, and that has worked out quite nicely. As you mentioned, it has been a relative underperformer to benchmark until now, at least for the last 5 to 6 quarters. Now that we have seen significant correction, probably one can look at selectively betting on certain real estate names. However, one should also remember that probably we are in the 6th year of upcycle in the real estate market in India. So to that extent, we would be taking a little bit of risk in terms of a continuation of that cycle. Historically, the cycle has continued for 8 to 10 years. So definitely we are past the halfway mark in terms of the upcycle in real estate. So I don't think at this point of time we would take a very, very large top-down view on the sector. Rather, we would look to invest selectively if the correction continues.
Hi, Harsha. Good morning and good to see you. And Harsha, the last couple of weeks, people have actually got even more fearful. Earlier, at least, there was that bravado that was playing out. How do you see things play out? If someone who's looking at allocating money, what would you tell them? That bulk of the bad news is in the price? Or do you think that still things are very, very skittish, both on the domestic as well as on the global front? And we've already fired quite a few bullets, both from the center as well as from the RBI. So what would your advice be? Bulk of the bad news in the price? Or is this still turning out to be a very, very uncertain couple of months?
Nigel, if you look at markets from September 24 onwards, it's been either declining or sideways for most of the period. So to that extent, I think time-wise consolidation has happened. If you look at the valuations, the large cap valuations are almost at long-term averages. If you look at mid caps, while it is slightly higher, the expected earnings growth is also likely to be slightly better than large caps. The real risk, however, still continues to be in small caps, which we have been highlighting for more than a year now. The valuations are almost 40 to 45% premium to long-term averages when you look at the index valuations. Over the last 5 or 6 quarters, there have been at least 2 or 3 quarters where the small cap earnings have actually declined. Forget about the expectations of 20-25% growth. They have not even given positive earnings growth. It's been a decline. So to that extent, the valuation risk in small caps is still very, very high. And in this quarter as well, we are unlikely to see any significant pickup in small caps vis-a-vis large and mid caps in terms of earnings trajectory. So to that extent, I would say that while markets have consolidated well, it's better to be in large and mid caps. Depending on your risk profile, you could choose a different proportion of large and mid, but it's still better to be in large and mid rather than focusing on small caps at this point in time.
Harsha, budgets in the past, if you look at the last 10 plus years, they've marked a decisive shift. Earlier it was capital goods, defense, etc., and the kind of spending. And that decided the way capital allocation was done, which were the outperforming sectors. Then there was a marked shift towards consumption, boost to rural as well as urban consumption. In this budget, do you expect any sort of a turn which can dictate the way money needs to be allocated?
No, it doesn't seem like, Rima. If you look at nominal GDP growth expectations, they are likely to be somewhere in that double-digit band, early double digits. So given that and the fact that the government is going to keep an eye on fiscal deficit, and probably we are going to see a 10 to 15 basis points of lower fiscal deficit number for the next year, and the likely fact that possibly you will also have a glide path towards a lower debt to GDP numbers, etc. It's very difficult to assume that there will be very large capital expenditure plans from the central government. In an absolute way, yes, it will still be a very large number, but on a year-on-year basis, you are likely to see maybe early double-digit kind of growth. And most of this is going to go into some of the sectors such as defense, renewables, manufacturing, and all of that. So it's likely to be more of the same in terms of the policy push, in our opinion. And of course, consumption has got some structural benefit through lower GST numbers. And even without anything specifically in the budget, that should continue to get some boost.
Harsha, just 2 questions. One, what are you telling investors, distributors, etc., with regards to what people should do with gold and silver ETFs? Right, that is one. And the other is, ICICI Pru AMC recently, they started accepting lump sum into their small cap fund starting today, with effect from today. Across industry, you included, right? I think you were one of the first to stop inflows, March of 24, I believe. So any rethink? I know you just said valuation discomfort and maybe large caps are better, but just your thoughts there.
Prashant, on your first question about gold and silver, we continue to remain positive on both of these asset classes. However, one should keep a prudent asset allocation in mind when you are looking at any of the asset classes, and especially the asset classes which have done so well over the last 12 months. For example, gold is probably up 70-80% over the last year. Silver is up almost 3 times in a span of about 6 or 7 months. So to that extent, anything which has moved in a vertical fashion, in a parabolic fashion, is likely to see volatility even without any fundamental reasons. So to that extent, any aggressive investment at this point of time comes with a lot of risk. However, given what's happening in terms of global trade and commerce, in terms of geopolitics, in terms of world order in general, we do believe that precious metals will continue to see a reasonable uptick. However, one needs to have a reasonably long-term outlook and also needs to make staggered investments rather than jumping in the fear of missing out. I think that's the biggest issue that one has to contend with at this point of time. As far as small caps are concerned, clearly our view remains that they are quite expensive. We are not stopping subscription of our small cap funds. However, we are clearly communicating to our investors and partners that probably it's better to be in large and mid caps in different proportions depending on the risk profile at this point of time, rather than taking focused small cap exposure. However, even when you take diversified exposure, you are likely to get 5-10% kind of exposure to small caps, which will be more of bottom-up selective opportunities that portfolio managers would bet on. And that's sufficient enough to take an exposure to small cap at this point of time, in our view.
Harsha, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here on CNBC-TV18. Well, we want to talk about our first corporate in the program. Coforge is the company I'm talking about. The reported numbers, and it's been a beat across the board. Revenues, margins, both slightly better. PAT, though, impacted by exceptional loss. We are joined by Sudhir Singh, CEO at Coforge. The last conversation, Sudhir, we had was, of course, extensively around the Encora acquisition and what you're going to do there. And I just want to, and we'll get to the numbers in just a bit, Sudhir. I think you've told investors that in terms of financing that, you are very close to finalizing that loan and there is no need for a QIP. Can you just tie that in terms of the financing of the acquisition?
That's absolutely right. When we spoke last and on the 26th of January, we said that we might consider a QIP for retiring the $500 million debt that's on the company's books. We have been working with a consortium of banks. We have secured a rate of interest which we found extremely attractive. It's somewhere around the mid-single digits. And therefore, we will not be doing a QIP and the associated equity dilution. We will be going down the loan route. And we remain committed to what we said earlier. There will be no EPS dilution as a consequence of this loan assumption as well.
Yeah, I mean, equity is more valuable, isn't it? Rate of interest, you said where are we at on this?
Mid-single digits.
Okay, mid-single digits. Anything else, just to tie in the Encora bit from the last time that we spoke, any movement at all, or all proceeding smoothly?
All proceeding smoothly, all proceeding as per plan.
Okay. Let's get to, so no QIP. That's essentially the first headline that we want to put out. And they're going to do the loan, $550 million, mid-single digit is the rate of interest, but no QIP, no dilution. So the numbers, as I said, I prefaced before I came to you, are good across the board. They've beaten expectations. On the BFSI side, though, which is a significant portion of your numbers, there is a bit of a degrowth. Could you start there? What happened in the quarter?
Well, the quarter, this was a seasonally short quarter, as you know, Prashant. We've closed 6 large deals during the quarter as a firm. 2 out of those 6 large deals have come in on the back of, from the banking sector itself. And in the investor call that we closed just about 15 minutes back, we've told the investors that next year, given the large deal momentum that we are looking at in Q4 and beyond, we believe that BFS has a very good chance of possibly being the fastest growing vertical for us in FY27. So we feel very good about banking financial services. And quarter 4 onwards, that reversal should be very visible.
And overall, FY27, considering your executable order book over the next 12 months is up 30%, what should we expect in terms of organic growth? And when will the Encora acquisition close? And how much can that contribute in FY27?
Sure. So as you're aware, we don't offer revenue guidance. But in the investor call earlier today, we said that we believe that FY26, and you know that YTD we're growing 32.8% at the end of quarter 3. We believe FY26 has been a very good year. And we believe very strongly that FY27 is likely to be an exceptionally good year. That's how we've characterized the likely growth numbers that we see ahead of us. As far as the second question is concerned, the growth at this point in time is coming from all 3 core verticals. It's also coming, in our case, from the healthcare and the public sector outside India space. With Encora coming in, there are going to be a few additional growth levers. High-tech as a vertical, LATAM as a geo, 11, 10 million plus accounts that gets added. So the intent, as we maintained over the last 1 month, when we did announce the Encora acquisition, is to not look at Encora and Coforge delivering the same level of performance as we have over the last 8.5 years, but to actually bend the growth and the margin numbers upwards from where they are right.
Yes, I remember you called it defining moment, which will accelerate Coforge's growth into a higher orbit. I think those were the words that you had used when you had made that acquisition. Tell us a little bit more about these new verticals, which are also doing very well for you. Healthcare, high-tech, and this time your rest of the world business, which I believe, as you're saying, is the government leg of the business, has done very well for you. So how much can that drive the overall top line in FY27?
Healthcare and high-tech together are already 10.5% of our aggregate revenue. That business has doubled over the last 4 quarters. The exact number, if I remember correctly, is 95% growth across healthcare and high-tech. And this is all pre-Encora. With Encora coming in, we expect the growth to be on steroids going forward. The UK public sector and the Australia public sector, again, continues to do extremely well for us. In the investor call that we just concluded, we said that outside the 6 large deals in Q3 that we've already announced, there's likely to be a very big contract in the UK public sector in Q4, the quarter that we are currently in, that we expect to sign. So we feel very good about high-tech. We feel very good about healthcare. We feel extremely good about the public sector outside India. And of course, the core verticals, including banking, are firing very, very strongly.
Yeah, and that guidance which you gave as the last time we spoke with regards to, just to go back to Encora, about 200 basis point margin expansion, that's very much on track. I mean, that is the aim still, right?
Absolutely is, Prashant.
What about margins, Sudhir? Because I remember in one of your analyst calls, you said that FY27 onwards, you'll stop giving a margin guidance. You had guided for 14% by this year end. You're on track to achieve it. But thereafter, you may not give a guidance per se, but 14% will be the floor on margins. Can you tell us what the company is likely to do thinking on margins?
We believe FY27 is going to be an improvement on the margin front over FY26. We don't give a revenue guidance. We will not give a revenue guidance in the future. We never used to give a margin guidance. We gave a one-year margin guidance for FY26 alone. We've said that there will be no margin guidance in FY27, but we have committed to the fact that at a minimum, the margin on the EBIT reported front will be maintained where it is, and it will be our absolute intent to make sure that it doesn't just remain flat. It looks up incrementally and hopefully materially.
Hi, Sudhir. Good morning and good to speak to you after a while. Sabre, that's one of your key clients. Some are doubting that there is financial turbulence out there, which in turn could impact your business. What do you have to say about that?
Sabre was signed about a year back. In the first week of the current month, the leadership, including me of Coforge, had a 3-hour meeting with the CEO, CIO, CAO, the entire leadership of Sabre. The program is going swimmingly well. We are ahead of the delivery milestones that we set for ourselves. We've always told our investors to recognize that Sabre is likely to be only 4 to 5% of our revenue. Please do bake in the fact that this is a firm, Coforge is a firm that's growing almost 33%. So while we continue to partner with Sabre, and that partnership is going well, we remain very cognizant of all risk mitigation measures that need to be taken at our end. They are all in place. Delivery is on track. And we feel very good about where that relationship is and the risk mitigation measures that we have in place.
I asked you this last time as well, so they're going to ask Shweta as well when both of you came on about, because I mean, there is, I think the first tranche of shares eligible, I mean, the Advent can sell in, I think by June, right? About 50% of shares. I mean, and Shweta, of course, very clearly said they're in it for the long run and they're not here to sell or anything. No, any conversations around that? Any assurances, etc.? I mean, you'd understand, markets always, of course, have an eye out on that if there's large supply around the corner.
Prashant, we've had no conversation around this. And I suspect Advent is best placed to comment on it. From a regulatory perspective, they are allowed to sell 6 months post-closing, and closing at the current point in time appears to be likely to happen around April of this year. And they've also committed contractually to hold on to the remaining 50% at least till the end of June next year. Those are the data points that we have at this point in time, and I'll defer to Advent to comment on their plans.
Yeah. I mean, the conversation with Shweta at Advent was not very old. And at that point, she had said that, see long-term creation, value creation with this investment, and that there are no plans in that sense. So I assume nothing has changed, but just wanted to ask you that. Sudhir, thank you very much for joining us. It's a pleasure having you with us on CNBC-TV18. Thank you for being here. Okay, well, that's strong guidance from the Coforge management. Exceptionally strong FY27, just what the markets would like to hear. And of course, they've done a very large acquisition with Encora. 1677, 1678 is where we're at. We take a break. We are joined by the management of Cyient. So technology very much in focus on the other side coming up.
Welcome back. Market's still flat, but the focus is on mid-cap IT companies. Cyient is the next one on our radar. It reported a mixed set of Q3 numbers. The company has achieved 3 consecutive quarters of improving sequential revenue growth. And the management in the conference call yesterday also spoke about achieving a 15% EBIT margin by Q4 of next year, Q4 FY27. That is for the main DET business. Sukamal Banerjee, Executive Director and CEO at Cyient, is now joining in. Thank you very much for joining in. Mr. Banerjee, you've said that FY26 will be a year of stabilization. FY27 will be the year of consistent growth. What kind of revenue growth should we expect for the overall business, all the three entities combined? And then if you could provide a little more detail about the digital engineering business, DET.
Firstly, good morning and thank you for having me. As you know, we do not give guidance. So from a perspective that you mentioned, which is with regards to how we see the future play out, definitely from our plan perspective, we would like to drive high single digit or I would say high single digit and probably on the borderline of double digit growth year over year is what our plans are. But at the end of the day, it is what our ambition and plans are, and that is what we are working towards. Our focus is quarter over quarter. As you know, we are a turnaround story, and we have been working hard on that turnaround. And some of the results are showing up in Q2 and Q3, as you have seen. And we have some ways to go, and we continue to be cognizant of that.
Okay, got that. So FY27, the aspiration or the ambition is to hit high single-digit revenue growth, borderline double-digit, but this is not a formal guidance that the company is sharing.
That is correct.
For Cyient. Got that. And particularly Q4, considering that there will be furloughs, what should we expect Q4 versus Q3?
So again, we do not give quarterly guidance as well, but we remain positive in terms of continuing our growth trajectory. And I'm talking about the DET business. From a semiconductor side, as you have seen, the semiconductor business has grown double-digit quarter over quarter over the last 2 quarters, and they continue with that momentum with a very increased order intake that they have announced. So I think overall, from a consolidation of Cyient DET and Cyient Semiconductor, which we report together, we should be on the growth trajectory.
All right. Hi, Mr. Banerjee, and good morning and good to see you in. What about bridging the gap towards that 15% guidance? I think it was towards the end of next fiscal. Tell us, how do you do it? And does that hold?
Yes, it does hold. So 2-3 things. Firstly, obviously, if you look at our numbers for the last couple of quarters, we have seen marginal increases, which is reflective of a couple of things. We took a very conscious decision that we are not going to slow down our investments. As shifting our service portfolio and our market portfolio is a very important aspect to our midterm to long-term growth objectives. So if you have to achieve the numbers that I'm talking about from an ambition standpoint for FY27, it is important for us to make sure that we make those investments now. So we have continued to make those investments. We also took some restructuring costs in both Q2 and Q3. And those are reflective in the numbers that you see. As we go forward, while investments will not ramp up, there will be incremental ramp up on investments. The restructuring will go away. And that creates a tailwind for us in terms of margins, which you hopefully should start seeing from Q4 onwards. And we have to continue working through FY27. It will be a combination of our continued focus on cost takeout, on largely non-people cost, and also a combination of making sure that the growth in revenue that we are talking about leads to lower absorption of our overheads.
Mr. Banerjee, morning, Prashant here. Could you give us the performance, the loss from the semiconductor business in the third quarter and April to December? And when will this stop being a drag?
Sure. Firstly, I think we need to look at semiconductor business slightly differently. As you know, our focus on semiconductor is a product focus. It is not a services focus. And like in the early journey of any product company, there will be investments, and that is what we are doing. From a perspective of guidance, we shared about this in the investor call also. Our focus is to become EBIT neutral in FY27, and that's something we are definitely working towards ensuring. So as the business continues to ramp up and our investments play out in terms of revenue stream showing up, we are confident that's going to happen.
What are revenues now and late 27, or, I mean, in terms of breaking even?
So in FY27, yes, we'll be, so we are not talking about the entire year. Sometime in FY27, we will become EBIT neutral is our guidance.
And what will revenues be from this business in 27, approximately, in the ballpark, just to get a sense?
I'm sorry, didn't get your question. Can you come again?
What will revenues be in this from this business in FY27?
Okay, so I think you have seen the revenue trajectory that they have demonstrated, which is double-digit quarter-over-quarter growth. And obviously, as the base builds up, that may be difficult to sustain, but we are confident about the growth trajectory they are on. We have many things in works from a perspective of their growth trajectory, and we'll definitely continue to see that number play out.
Okay, let's
Just, one more question on the semiconductor business. What was the loss so far in the semiconductor business at the EBIT level in Q3 or 9 months FY26?
I don't have that handy. We can get back to you, but I think as I mentioned, our entire focus on the semiconductor business is what is our investment line and what is our revenue growth that we are driving. That is how we are managing that business, and we'll continue to manage that business for the time being.
Okay, all right. Since we're talking about this business, tell us about the deal signed with Kinetic Technologies. You're going to be paying close to around 900 crores, effectively doubles your target market. Tell us the funding of this, and will it be EPS accretive in year 1, year 2?
Yes, it is EPS accretive in year 2, and that's what we announced when we announced the deal. From a funding perspective, it will be a combination of cash and debt.
Okay, you want to give us the mix out there, and how much will it add to the top line in FY27 itself?
So from a mix perspective, it is something which it is to be determined as we get closer to our closure, which is sometime expected in April. That is when we're going to take the final decision. It will have a healthy debt component, and there will be cash as well. The exact split we'll decide at that point in time. And there was a question around the revenue. It is going to double the business that we have today in terms of overall run rate.
So when you give us that FY27 guidance of high single digit, maybe closer to double digit, how it will be aided by the some contribution coming in from this acquisition, Kinetic Tech. So can you give us a sense of what organic growth for the company will look like?
No, our numbers that I'm talking about is for the DET segment. Semiconductor, we report separately. For the DET segment, there have been no acquisitions. And the numbers that I'm talking about and sharing in terms of our ambition is our organic growth. So as and when an acquisition happens, obviously we'll talk about it at that point in time.
No, got that. Fair point. Any more acquisitions that you're looking at for the other businesses?
Sure. I mean, we are continuously evaluating the market like anybody else in our business. As things change, as I said, we are a turnaround and a transformation story. It is important for us to make sure that we are changing our portfolio towards more higher growth areas. And we have consistently talked about in our investor calls as well as to the investors that it is important for us to make sure that we acquire higher growth sectors, which is largely around digital and data, which has a significant overlap with the business that Cyient does in terms of future transformation, as well as there are certain segments or industries in the market which are very big, where our presence is minimal, like automotive, like software, where we would like to definitely look for strategic transactions as and when they become available.
No, makes sense. Thank you very much for joining us. Good luck, and hope to catch up again soon. Well, CAMS is the next company we want to talk about. They reported a decent set of third quarter numbers, strong growth in non-mutual fund revenue. EBITDA margins expanded by 135 basis points during the quarter gone by. Anuj Kumar, Managing Director at CAMS, is with us. We're talking about three things: outlook, of course, for 27, impact of mutual fund regulation changes, and growth opportunities in the non-MF business, which, of course, I mean, CAMS has regularly told us is growing much faster, will be a big area of growth. I want to start with point number 2. Thanks very much for joining us here, as always. Prashant this side. Has there been a conversation with mutual funds in terms of renegotiating contracts? Because, I mean, as we understand it, the discussion is, the effort from the regulator side is to, ask them to lower what they charge. So their cost structure perhaps under some pressure. So has that shown up in terms of your talks with mutual funds, sir?
Good morning, and thanks for having me over on the show. So you're right. The objective of the regulator is to make the product cheaper for the marketplace and investors. All the recent TR discussions, I think, will have, I wouldn't call it a marginal impact. It is not substantive, not marginal, but a small impact on the larger mutual funds. As we've always said, we are at the high end of value delivery for the mutual funds in terms of running the entire liability side operations. So we believe we deliver sterling value to them. Let this play out over the next 4 or 5 months. If we have conversations, we will see how they go. But right now, there is nothing that's happening right now on that front.
Right. Is that because of the nature of these contracts and when they come up for renegotiations, Mr. Kumar, or it's just that it's not happened? I mean, they're not clear yet, so they've not asked you or renegotiated their rates and what you charge them.
Yeah, so there are many puts and takes there. I would just cleave the market into 2 parts. One large part of maybe the top 10 mutual funds will see some impact on account of the exit load going away. The rest of them will see balancing out of the impact of the exit load versus what what is positively accretive to them from the GST front. So if you take the top 10, they are perhaps going to see some impact. They're also evaluating, so are we. So this hasn't commenced yet in terms of a formal dialogue. The other thing, of course, you're aware is that our unit price comes down every year. So there are scale benefits baked in. The unit price falls almost every year, which I think is anyways in favor of our customers. There are very few marketplaces which operate like this. So when you put the impact of these 2 things together, we're just waiting and seeing whether they want to have a conversation on this or whether they've figured out ways to absorb this.
So you're saying 10 large, and you'd be dealing with all of them, mutual funds, will see some impact.
About 7 of them, yeah.
You deal with 7 out of the 10 mutual funds where there will be an impact because of the exit load going away. So they're watching in terms of how to navigate this.
That's correct.
And when will this renegotiation come up, sir? At sometime during this year, 26?
Yes, I mean, if they choose to come back to us, it'll perhaps be in a 3 to 4 month time frame.
Okay, so maybe in Q1 of 27 is when we should expect it?
Yeah, I would not set any definite expectation on it because the entire exit load is about 5 bips. They run pretty large P&Ls. But if it has to happen, it'll probably happen in the first quarter of FY27.
Okay. All right. Hi, Mr. Kumar. I think we've got some clarity on that front. So let's focus on the numbers then. Revenues year to date, I think, up are only around 5%, with margins being maintained in that vicinity of mid-40s. For the year, what kind of growth are you looking at this year as well as the next? And in terms of your share, you were telling us that the non-MF business will grow at a faster clip. So the contribution will gradually move up. Give us the guidance on that front as well.
No, sure. So if you see this entire year, I would just say that it is in the backdrop of a large price reset we had taken about a year back, about 9 months back. So year-on-year growth numbers for the quarter and for the year will be in single digits. That's point number 1. Despite that, you would have seen that operating EBITDA from the first quarter of this year has climbed up from about 43 to 46%. A large part of that is just productivity delivered out of our technology initiatives, largely playing out. You would have seen the CAMS AI brand go live. I think a lot is happening in the base tech stack for us to get benefits out of that. The non-MF business for the quarter grew about 25%. A broad statement of the markets has been that this will grow ahead of the overall enterprise revenue growth. So we've set a 20% baseline. This quarter was better. When you look at FY27, we would not be comparing revenue growth with the larger base. It will be with the smaller base after the price reset. So we are expecting FY27, and again, this is not a formal guidance. We don't issue those. But we're expecting that revenue growth at the enterprise level should be about 12 to 13%. Non-MF revenue growth next year, FY27, should be upwards of 20%. And EBITDA, operating EBITDA growth should be upwards of 15%. These are broad indicative numbers. We don't issue guidances, but just the way we think the year will play out, all of that should be possible.
Right. So revenue growth of 12 to 13%, Mr. Kumar, that's what you're saying in 27?
In 27, yes, absolutely.
Okay. And since you're sharing those numbers and you said these negotiations will take place, is there any sense of how to think about the impact I mean, worst case, base case, and bull case.
See, I'll give you a very broad indicative number at no percentages, only absolute numbers. We expect a revenue increase, absolute rupees, to be between 150 to 200 crores a year. If any of this happens, the impact could be about 20 to 25 crores annually. So it will be a small fraction or a manageable fraction of the overall revenue increase that we get in a year. I think we are mentally prepared for any of these dialogues to commence. Like I've always said, that the amount of value, expanding value that we deliver to the market, we don't expect any dialogues with friction. They will be fairly amenable to listen to our side, to our expanding scope and the value we contribute. So it is not a in-the-face kind of dialogue that we're expecting.
Okay. So you're saying that worst case impact with respect to mutual fund negotiations led by this attempts to lower fees by the regulator annually could be about between 20 to 25 crores. I just want to get that right.
That's correct, in that range.
Okay. That's very helpful. The other bit, which is a more structural thing, of course, is this move towards passives, ETFs, and we've seen, of course, this happen in the Western world in a big way. And here, of course, I guess, many believe it will happen. And of course, their cost structures are much lower. So any thoughts on that? I mean, that is, as I said, a slightly longer driven theme. Will that have a sobering impact on your profitability as well?
It's a slow reset. It's a very slow reset. Whatever you've seen in the world of ETFs in the last maybe 12 months has been led by gold and silver. Hasn't so much been the impact of equity ETFs. I also believe, and as an investor, not as part of the ecosystem, as an investor, I see that in falling markets, actively guided mutual funds have given much better cushion to investors. So what we see is that about between active equity and passive funds, there is perhaps a 1% swizzle every year. That 1% swizzle has been there at this rate for about the last 5 years. If it stays that way, you could see about 0.5 to 1% of active equity give way to index funds and ETFs. And I'm saying net of the metals, this is purely equity. We're prepared for that because overall, as you've seen, the AUM growth in the market has been 20%. Last year, despite whatever has happened in the market, the asset growth for CAMS has been 19%. Within that, if a 1% swizzle happens, I don't think it is a material impact to our financials.
Got it. Okay, all right, sir. Thanks a lot for joining in and giving us that clarity. We look forward to chatting up with you rather soon and wish you all the best for the remainder of this quarter.
Thank you very much.
Well, it's time to slip into a short break. On the other side, we'll connect with the management of HDB Financial Services as there was a bit of a rejig at the top. Stay tuned. Well, the advanced decline ratio has turned in favor of the number of stocks declining. So that's telling you the markets are still very, very skittish. The good news is 20, 30 points down is par for the course. This market just needs to stop falling. That said, let's get to our next management. HDB Financial Services, that's in focus because Mr. Arjit Basu resigned as the non-executive independent director and chairman with immediate effect. He cites conflicts of interest as the reason to step down from the board. To discuss this, give some kind of a surety and clarity with regard to why the step was taken, we have Mr. Jaikumar Shah, the CFO of HDB Financial Services, who joins in. Hi, Mr. Shah. Good morning. Good to see you in. And, sometimes investors get a little bit rattled when someone at the top, moves on. You've given the reasons are out in the letter that you'll have put out. But, give us some clarity. Why did this take place? And the investors will be looking for some reassurance. So go ahead.
Sure. So firstly, let me, take a few seconds to just thank Mr. Basu. I think he's been our chairman for 5 years. He joined same time as me almost 5 years ago. Has given us absolutely invaluable advice, stellar guidance, and also took us through the IPO that we did earlier, middle of last year. I think as he mentioned, his term was coming to an end in a couple of months. He's, looked at what potential options come his way. Mr. Basu in his letter has mentioned that he has a certain opportunity coming through as in a bank where his name has been put forth. As you would think, we work with all the large banks in the country, and given the kind of related party transactions that come up, scrutiny that comes up, Mr. Basu, again coming from the HDFC group, felt from a governance standpoint it's best that he takes a step back and does not have any questions raised. So that's the conflict that he potentially referred to. I think from a company point of view, we've absolutely had a great relationship with Mr. Basu. Mr. Basu also has acknowledged in his letter that the governance standards that the company has held has been very high. So that's how I would put it, not to read more than that.
Jaykumar, hi, this is Rima here. So when will the company appoint a new non-executive independent director and chairperson of the board? Have you identified anyone, since anyway his term was coming to an end?
So we are in the process. As I mentioned, we're part of the HDFC Bank group. I think the group goes through a very detailed process. We will work with our parent to make sure, we have a chairman in place soon.
Okay.
Any timeline?
No specific
And have you
timeline.
identified candidates?
If you look at our board, we have 6 independent directors. So it's a very well, how do I say, a very illustrious board that we have of, eminent dignitaries. So I'm sure, with that board, we'll be able to function very smoothly in times to come.
Okay.
At the same time, the bank will, appoint a chairman.
Just some clarity. It'll be the replacement will be from within, or it has to be, from outside?
We have both options open. I think we'll work with the bank to do the needful. As I mentioned, with the parent with us, and strategy is very clearly laid out. Okay. From a smooth functioning of the company, there wouldn't be any, challenges as such.
Okay, all right. Since we have you with us, Mr. Shah, just wind this down with how things look going ahead. I think you'll be looking to outgrow the industry. So just give us some clarity on that. And there has been some various segments of stress, right? Do you think the stress is receding right now? Your reading of the situation. Please go ahead. Growth as well as stress in the system.
So from a growth point of view, as we've called out in our public calls also today, we look at nominal GDP and a growth above and over and above that. And we're fairly confident at this stage over the coming years that we will work towards that growth targets. Right. In terms of stress, there has been some stress in the past few quarters. Stress is receding, and it's visible through the numbers as well that we should be able to march forward well going forward.
Right. Mr. Shah, hi, morning. We have we had Ashok Leyland with us this morning, right? We played out portions of an interview, and he said, well, for commercial vehicles, he said it's likely to be a great year. Now, your exposure to commercial vehicles is not small. I mean, it's, I think, significant, right? 40% is asset financing. CVs make a large part of it. Do you resonate with that view? And any thoughts specifically on that segment?
So, Prashant, the way I would look at it is we're very optimistic, but at the same time cautiously optimistic. Today, things change by the day. It's important that we, push hard and at the same time be resilient to the same. So that's the focus for us. I think Q4 has always been good for us as a company and the industry. And as we march into FY27, I think the focus will be to continue on that pace with the right asset quality as well.
Right. Okay. But relatively the pace is picking up for CVs, right? You'd give us that
That's
much?
Correct. That's correct.
Got that. We'll leave it there.
And quality is also improving.
Asset quality is
both
also improving. Yeah. That's the feedback we get from elsewhere as well. But thanks for confirming it. Appreciate it. Good luck. And thank you for joining us for this short call and explaining what's, of course, why Mr. Basu has stepped away. Another opportunity, basically. 711 is where HDB is at. Market's absolutely flat. But basically, you've got sharp turns, right? Look at just Gokuldas exports went up 6%, almost back to about 600 yesterday. A complete reversal, 5% lower, right? And it's just that kind of a market. where we are seeing and a lot more. So I mean, the other big reversal, of course, is all these silver gold ETFs, right? Sharp 10-15% cuts yesterday, all back 10%, at least 10%, if not more. The other one is IIFL, is up 4%. We had the management with us, and they're saying, well, that special audit by the IT department is procedural. Stock was down 15. It's still down basically from before the from when the company reported results. It's down 10% still. But today it's coming back. Bajaj Consumer, big move yesterday. Another 3% on the back of numbers. APL Apollo is up about 3%. So some of what we identified right in the morning, continuing with gains. Ujjivan Small Finance Bank is another one which is up about 8% or so. But I mean, if you just look at the top 12 odd quotes, 15 odd quotes with volumes, it's all silver, gold. And you got a stray stock thrown in between in that sense. Market breadth is negative. Some 200 stocks, it declines outnumber advances by some 200 odd stocks. So it's not hugely negative or anything, but there is, that's where we're at. Eternal is the number one volume-led loss, 3% down on Eternal. So it sold off hugely from the day's high, and that cut continues. Actually, Swiggy is down about 2.5% as well. Well, it's a quick commercial break here, and we're going to come back with the management of Indian Bank on the third quarter numbers and outlook for 27. Lata will take that conversation forward.
Welcome back. Earnings season. So we continue with corporate radar. Indian Bank is on our radar. It reported a good 14% growth in loans and almost 13% growth in deposits, 12.6% to be precise. The bank's net interest margins improved quarter on quarter by 5 basis points. They now stand at 3.28. However, as in all other banks, net interest income and profit growth have been muted, both at around 7.5%. Joining me to discuss the results is Mr. Binod Kumar, Managing Director and CEO at Indian Bank. Mr. Kumar, good morning. Thank you very much indeed for your time. Would you say margins have bottomed, and going forward, we can only see it inch up, probably 5 basis at a time?
Thank you, Lata, for having me here. See, margin, I will not say it has bottomed out, because the impact of 25 basis rate cut, which has happened in the December, impact of 2 months will come in this quarter. And also, if you see, after December, bulk rate has hardened by 20 to 30 basis points. So I expect there may be some moderation by 2 to 3 basis points. And if there is no rate cut, next quarter onwards, we can see the inching of the NIM.
Okay. Well, your yield on advances have gone down a bit, and your yield on overall funds also has dipped. But now we are seeing interest rates rise in the market. AA paper and SDLs are fetching a decent amount. You don't think you can make up that loss of, loss in loans, EBLR loans, by a higher yield on investments?
But then that will have again impact on the treasury portfolio. Overall, if you see, if interest rate going up, then maybe mark to market, yes.
Okay. So that's not helping. Where do you see growth coming? Will you be able to maintain 14% loan growth?
Yes, I will be able to maintain around 13 to 14% growth. If you see, my majority of the growth is coming through RAM sector. RAM sector, I have grown in excess of 16%. Even retail, I have seen good traction of 18%. MSME also very good traction. We are seeing 16%. Agriculture also 16%, 15%. So going forward, I expect I will be able to maintain growth of 13 to 14%.
Yeah, all your sectors have grown 15 and 16 except corporate, which is 8. So that's why your average is working out to less than 16 to 14%. Is corporate showing any signs of wanting loans?
Yes, definitely. If you see, my corporate loan growth used to be in the range of 2 to 3%. Last quarter, it was around 5%, but this quarter, it is more than 8%. There are few sectors with sectoral based demand are coming. Like in green finance, a lot of demand is coming, whether it is EV or solar power manufacturing, solar battery manufacturing, solar cell manufacturing. A lot of demand is coming. We are also seeing good demand in data warehouse. That is also coming in a big way. Plus, logistics sector also we are seeing good demand in the shape of fleet advance and also warehouses construction. So there we are seeing good demands.
Okay. But yeah, I agree with you. In fact, situated as you are in the south, I guess data centers and logistics should all be very high. All the auto ancillary guys only seem to want to invest in deep south. So you must have a very good logistics portfolio. But Mr. Binod Kumar, I already noticed that your yield on advances or your cost of funds is actually higher than your cost of deposits because you must have raised CDs. Do you think the percentage of CDs will go up now in this quarter?
No, if you see my, not only CD plus bulk, if I take, that has remained at the same level as September. And my endeavor will not to go for the bulk. My endeavor will be to maintain CD and bulk at the same level. Of course, I mean, if there is a very good demand, of course, we can raise. But my endeavor will be to maintain at that level only.
Okay. But it's just looking tough for all the banks. There is a big difference between the advances growth and the deposit growth. In your case, the difference is only 1 percentage point, but for many others, the gap is higher. Okay, I want to come now to what I think is the most difficult part of your presentation. Your SMA2. Why did it go up so much in one quarter? Your SMA2 in the second, as of September, was 2,461 crore, rises to 5,000 crore. What happened?
Yeah. So let me first tell you about the overall SMA book. My overall SMA book has more than halved. It was in December 24, 11.88%. This quarter it is 5.05. So more than half it has. And there are two PSU accounts which is oscillating between SMA 0, 1 and 2. Last quarter it was in SMA 0. This quarter it has come in SMA 2. But I don't see any stress in these accounts, and we are quite hopeful that these accounts will not slip to the NPA.
Okay, I just want to explain to our viewers, when we speak about SMA2 or SMA1, SMA1 are those loans which are overdue, but overdue for 30 days. SMA2 are those loans which are overdue, people have not paid interest, but they have not paid interest for 60 days. And that is the number that has gone up from around 2,000 crore to around 4,500 crore in the case of Indian Bank. But as Mr. Binod Kumar points out, it's also important to note that compared to year-ago levels, it is half. It was sitting at 7,800 crore. It is, by those standards, down to 5,000 crore. You don't expect a rise in NPAs, do you, sir?
No. Our slippage ratio will be very much under control. This quarter also, if you see, it has come down sequentially from 0.79 to 0.69%. And we are not seeing any stress in any of the sector. Some smaller loans are there, but we have taken that in stride and we account for that. I don't see any, upsurge in the slippage.
Okay. What about, no, because it was SMA2, 5,000 crore, I'm asking, you expect most of them will pay up by the 90 days?
It has gone up only because of two accounts, and that outstanding of two accounts is 3,000 crore. If you take 3,000 crore, it will be the same level, rather improvement.
Okay. So that's the danger part. What about recoveries? You are doing a standard about 2,000 crores in terms of recoveries a quarter. Will that continue?
Yeah, recovery. See, I have given guidance of between 5,500 to 6,500. So far, I have already achieved 5,300. And quite hopeful that the number what we have achieved in the last quarter will continue with that.
Yeah, but credit cost has inched up. Okay, no, sorry. That's last year's. I'm sorry. Let me come to capital. You've used up a little bit of your capital. You were standing close to 17. Now your capital adequacy is at 16. Will you want to raise money now?
No, in fact, see, capital has in fact come down because of we have 2,000 crore 81 bond retired and we have not raised that. So we are comfortably sitting at 16.58, and in March profit will be flowed back. So it will again reach, I think, around 18%. So I don't need any capital, additional capital. And one more data I will just share. My return on equity is in excess of 19%. And my credit growth is around 13 to 14%. So going forward also, I think capital will not be required.
Oh, you think capital won't be required. Finally, how much was the impact of the new labor codes for you? Will there be more of it in the coming quarters? And for the banking, PSU bank sectors in general, is it an impact at all? Normally, do you all have contractual staff?
No, we don't have any contractual staff. Only 15 staff we have, and impact of that is around 55.86 lakhs. Very minimal impact we have. Because our public sector banks, normally we have regular employee and very few contractual employee, maybe in a few tens or 20s or 30s.
Okay, so this quarter you didn't have any impact of the labor code at all?
No, not at all. And going forward also, I don't see much of the impact.
Okay. Did you hear anything about integration, consolidation from the DFS? It was very much the news about 6 months back. Any update on that?
I have heard through media only, not anything.
DFS didn't speak about it? Okay.
No, nothing has been discussed with us. Thank you.
Okay, sir. We will leave it at that. Thank you very much, Mr. Binod Kumar, and all the very best for the last quarter as well. Okay, so that's the word coming from Indian Bank. It's a good set of numbers. I mean, margins have improved, but it's a very cautious guidance saying that a bit of the margins may be given back because, the rate cut came in December and therefore the loans became cheaper only for a few days. Now, in the entire impact will be felt in this quarter. So we should expect some pressure on margins in this quarter as well before they start rising. That's the expectation. Well, the other set of numbers, since we are talking about Indian Bank, we should talk about Bandhan Bank. Not a very pleasant set of numbers, but the only point is that it was as estimated. But the expert on the field is Gaurav, and he's here to detail to us the Bandhan results. Go ahead, Gaurav.
Well, as if you look at Bandhan Bank, the results were expected to be weak, and bank has actually reported a bit of a weak set of numbers. Net interest income that declined almost by 5% on a year-on-year basis, while there was a support of 120 crores because of the sale of ARC, and that is the reason why we saw other income going up and PPOP also declining by 28%. But there was a support. Other than that, if you look at the PPOP, there was once again 120 crores of impact because of the new labor code. So we could say that the gain from ARCs was offset because of the new labor code. But as a result, if you look at provisions, they have declined and profit declined almost by 51% on a year-on-year basis. Now, what actually is positive for the bank is that first is net interest margins. If you look at net interest margins, they have improved almost by 6 basis points on a sequential basis. This was in line with the street's expectation. But what is positive is that even going ahead, management said that the net interest margins will improve in the next 2 to 3 quarters, and the reason being that the cost of deposit is something that they are actually controlling in a very good way, and that is the reason net interest margins are likely to increase. Second is the credit cost. Now, credit cost has declined almost by 12 basis points, although it is a bit elevated, but management said that credit cost will decline further. They have given a guidance of around 1.6 to 1.7% credit cost next year. So that is something which has been taken in a positive way by the street. As we speak, the stock is up more than 4%.
Okay. All right. Taken positively. Thank you very much, Gaurav, for that update as well. As a whole, actually, public sector banks are doing well. Today, among the gainers is really Bank of Maharashtra, Union Bank, Canara Bank. Public sector banks have rendered a brilliant account of themselves, and they've always had a lower discounting in terms of ROA. So now the market is sitting up to acknowledge that public sector bank quality, especially asset quality, and the steep fall in credit costs in all of them is here to stay. And then, of course, we had the big news that power discoms have turned profitable. That was the single biggest source of NPAs. That also is gone. So public sector banks have clearly got a leg up from this general improvement in asset quality in the economy and in their own books. Market is also punishing where you have got management change news. So Eternal is still a little bit under the weather. Interglobe, people still worried, although most of the brokerages have called a buy after that difficult quarter. So market still dithering. Not in a very fine place at this point in time, though we have seen other markets in the green. Indian markets still struggling to find buyers. On that note, wrap up on Bazaar. Chartbusters coming up.